good morning, everyone. We are small and mighty today. Hopefully, there will be other people that will be joining us. Thanks for coming today. This is probably one of the most important ones. I said that about the insurance one too, and I said that about Jerica's thing too. So I say that every week. But we're talking about the business side. This would make a nonprofit the business, which is the money side, the finances, right? So these are the things we'll be looking at today. We are going to go through a personal financial assessment so we can see what our money habit and attitude is. And that's a very unique thing. We have an online process and we have card games here for people that don't want to do it online. When you do it online, though, you get a full report that tells you all about your financial habitudes. Then we're going to have a Q&A with the CPA. So my CPA, Darlene Knapp, is going to be here today, and she'll give us, she does a lot of work with nonprofits. I ran a tax firm for 25 years and I sold my business to her. And so she's my CPA now, and I don't do my own taxes anymore. But she's very user friendly, very community oriented, very excited about having her come. Then we're going to go back to Charitable University because we are going to let them teach us about those financial pieces. So we're going to log in there and we're going to watch the Charitable University site here for the two financial things, budgeting basics, and then they have another one. So we can go through that and we can stop it and ask questions as we go through. We'll have some people here that are in the finance area that can answer those questions, or myself if nobody else makes it. Darlene Knapp. Yes, Darlene does all tax. She's a CPA. Her office is in Waterville. She does my business and my personal taxes. She guides on nonprofits. She has a couple of nonprofits that she does work with, so she could do the 990s for nonprofits as well. And so she'll talk a lot about like those financial responsibilities and things. Darlene coming with the truth, and we might not even have to do a lot of these things depending on what she's going to talk about. But that's her area. Hi, Rolanda. Grab your stuff and coming in. So we're going to get to the board requirements, hopefully the board requirements as it comes to duty of care, duty of loyalty, and all the board situations around money. I am on I'm the supervisory chair for the University of Toledo Federal Credit Union. They train us constantly about finding fault and issues. And when we fail to not have two signers or let the CPA have the only access to the bank account and pay all the people, you setting yourself up automatically for somebody to steal money from you. And so we think everything is nice, but we just heard that insurance talk yesterday, right? Last week. And so we have to really pay attention to what does the board have to do with the finances and how much are you liable for the things that happen. You don't have to necessarily do all of that stuff, but you have to oversee it. And if you don't have those policies and stuff gets stolen, then you are in trouble for that. And so we're going to talk about those board requirements and things like that. And then we're going to build a budget. And so if you are doing a program, if you with an organization, if you just want to do your personal budget, budgets are two things: what you bringing in and what you putting out. But if you don't spend time in your organization during planning season and create a budget, we're going to talk about with your finance committee. If you run in a nonprofit and you don't have a finance committee, woe to you. You must have a group of people that do the finances, not the leader, right? The leader should not do the finances solely alone. That's cause for all kinds of issues. You're going to miss something. You need a finance committee. So when you're looking at who should I bring to my board, you have CPAs, you have bookkeepers, you have people that do their own businesses and have some extra time and can put all your stuff in QuickBooks, things like that. But if you don't have those things, it's an issue because you're literally banking on your one self to do all of the stuff, and you're going to fall at some point, particularly when it comes to the money. You had a question? Oh, you got the other one?
How hard is QuickBooks to learn?
QuickBooks to learn is not difficult if you have a good teacher. Darlene does QuickBooks training. We had Arlena McDaniel came in from Maumee Bay, and she did QuickBooks training for us. It's using it. So any software, anything, it takes 40 hours to become a master. If you spend 40 hours on it, you're going to know it. Why don't you know how to use YouTube? Because you don't get on YouTube every day for 8 hours. If you did that for a week, you would know you would know the things, right? So we talk about Gmail is difficult. That's because you don't use it. All you got to do is use it over and over again.
Sure.
Once it's the problem with QuickBooks is the setup. If it's not set up right, all your reports are going to be jacked up. So that's why I would say you might need somebody as a professional to come in and set up QuickBooks. But running QuickBooks, especially if you're not running a whole bunch of money through your account, if you only got 3 to 4 exchanges every month in money, that's not a big deal. But we moved into the grant space now. So we got all these grant things and we got all our organization things. Now we're going to run 2 grants concurrently. That looks very different.
Now, when you say a lot of money, are you speaking of also receipts?
Yes, any transactions.
Okay.
If it's a lot of stuff, you can actually sync your bank account to QuickBooks. So it'll just put all the stuff in there. You just got to categorize it.
Okay.
But you need a trained person to set it up that way.
So now, and I know we get a chance to ask her this when she comes, but does she do like a separate charge to set up QuickBooks? Okay.
Yep, she got a whole training process.
Okay.
Yep.
Okay.
Yep, and they have bookkeepers there too. So but again, personal references I think are excellent. You might also know some other people, but I go by personal references. That we're not saying give all your business to the people that came in here and presented. Just know some people you can refer to when you maybe talk to somebody else and they sound like they're talking out the side of their neck. But I met this one lady and she said this. Y'all saying something totally different.
But right? I think that's also the biggest benefit of having something like this.
Yeah.
All the resources that have come through this to me are more valuable.
Sure.
And tangible.
I'm glad.
Because we got a chance to hear from them,
yep,
see their work, hear about their work. Then we can go and say, hey, because I did it last week. The guy intrigued me because I heard he knew what he was talking about.
Mm-hmm.
And he was very fluent in it. And he was confident in what he was talking about. And then when I contacted him, he emailed me back immediately.
Yeah.
And then set up a meeting. And he didn't wait for me to call him.
Yeah.
He called me for the phone meeting.
Nice.
To me, that's bar none.
Okay. I'm glad.
Yeah.
I'm glad.
That's business.
I'm glad. That works out. That's good to hear. Yeah. Thank you so much. I appreciate that we bringing good people in and they working for y'all. I love that. So that's what we're going to talk about today. We're a little bit off schedule, but that's okay. We're going to make it. So we're going to start out with this. Yes, ma'am. Did you have? Yes.
How important auditing is even after you get your book set up.
Oh, yes.
And not just your own personal auditors. You need to every now and then have someone from the outside come and audit what your auditors are auditing.
Yes, absolutely. That makes sense. It does make sense. We always want to say, oh, we checked our books. You can't check your own books. That's illegal. You can have an internal audit for your information, but if you want to get moving from a $25,000 budget with the city to a $175,000 grant with the city, you're going to have to turn in audited financial statements. That means pay a professional to go through your books and write a report and say, you're doing what you said you were going to do with the money and there's no impropriety here, right? I'm not going to never tell no bad story about myself if I'm that type of person, right? Like, I'm going to be like, oh, let's just fix this. No. Somebody's doing this wrong and you need the training and you need to get it fixed. Hey, come on in. Sign in is over there. So yes, audited financials. I'm sure Darlene will talk a little bit about that. If she don't, we'll hear that in the charitable registration, Charitable University. So we're going to go to this Money Habitudes experience, and we should be able to get through this fairly easy. If you have your computer or your phone, you can log in. We'll show you what that looks like. But Money Habitudes, as I said, is a program. I am a certified trainer for Money Habitudes. I use this for financial literacy training with teens, with community people, with job and family services people, with daycare professionals, with all the staffs that I train for professional development. It is a tool that helps you talk about money and how you use money. Why do a lot of marriages fall apart? Because of money issues. If people would do this training or take this one assessment in the we thinking about getting married phase, it would save 100 arguments, issues, right? Because you might not know yourself. You just know you like to shop and do stuff, but you might not know your partner, right? Or your partner might not know how much you like to shop until y'all mix all the money together. Or you might be one that sides, put your money over to the side, like I got my account and we got our account, right? That comes out in these types of things. And we have a card game for people that don't like computers and don't want to do the assessment. So it's an easy way to do it. I'm going to show you what that looks like. But we also have it online. So there are 6 different money habitudes. You like security. This is how do you relate to money? What is your habit with money? And what is your attitude about money? That's why it's called Habitudes. Very nice people. I know the founder of this. I know the new person that just bought the business. We were in training together for quite some time. And it was a really good, it's just a nice tool. I like easy assessments that give you a lot of information in a very short period of time. Mm-hmm. And they're written at a level that you don't have to have a college degree. And they saying all kind of like highfalutin words and making people feel bad. Because people feel bad about money all the time anyway. Like, I don't want to talk about that. It's the worst conversation to have, basically, is about money. So security. Do you like money because it helps you feel safe and secure? So that's how you operate with your money. Are you a planner with your money? Like it helps you to achieve your goals. Do you like status? Like I use my money to buy high-end items because I need people to know that I can get a Gucci bag. That's not bad. It's some people that live by status. They like a particular type of car, or they like to be early adopters and get the best or newest phone because they use money to show status. Is that good, bad, or indifferent? That's not up for anybody to say. It's just their money habitude. It's the way they approach money. Another one, are you a giver? We have people that we know are givers to the end, but too much of any of these can be a bad thing, right? If you give all your money away, but you forgot to pay the light bill, well, and this comes into a lot of arguments in faith spaces as well. Some family members want to be tithers because they are givers. Other family members be like, I like security and I love Jesus, but I want to pay my house note first. Right. So that down people, you know what I'm saying, bumping heads with each other because you put too much money over here and we supposed to be putting money over here. Spontaneous. Do you just enjoy life? And if you got $30 and you want to eat out that day, you just going to use the 30 for that. And tomorrow we'll wait on the phone bill. It's going to come. Right. It's something to being spontaneous with money. Some people that retired, they can get spontaneous with their money because they done did all they, basic things. But there's some people that got little kids that's spontaneous with money. And the kids have a good time until like the 30th when it ain't no dinner. Or, you know what I'm saying? Because they too far over on the other side. So again, good and bad. Same thing with security. You could be so terrified for tomorrow. And we know people that retired from a job and never got to spend none of their money. They put hundreds of thousands of dollars away and died. So they was way too much on the security, way too low on the spontaneity part. So they never went and had a vacation, but they ready for 88, except for they made it to 67. So you saved all this money for all these extra years, right? So it's good and bad in each one. And then carefree. Money is not a priority. Now, I would put this in the I got a sugar daddy part, right? That's what would I even be carefree if I had a sugar daddy? No, I would not. All I'm just saying. So carefree, that's probably the one where I go, they said it ain't no bad ones, but and that doesn't mean it's bad. That's just me saying that. Again, none of these are bad. So when we look at these and you find that you are more carefree with money, you're going to learn about all of these things and then make a decision. So we can't change nothing until we know how we operate or why we operate the way we do. And it also is very insightful. People, after we do this, people are like, oh, can I have an extra one to give to my husband? I'd be like, I only got cars and I have to pay for them online ones, but he can call me. Can you be multiple? How do we get to it? Oh, hold on. I'm going to tell you. Can you be multiple? Can you be, huh? Oh, yes, definitely. It's going to be one that rises to the top and then they go down in grade. So you'll be able to see them all. So anybody want to do the cards? I got 15 online assessments. If you got your phone, you can do it online, or you want to play the card game. You want to play the card game? Okay, I'm going to give you the card game. And then this video is about the card game. It only take like a few minutes. on this video. So let's watch this video. Here we go. Oh, I don't hear no sound. Uh-oh. Did the sound start yet? How you make this door move? Okay. Sorry, guys. Oh, the sound is on. I can't hear anything on the video. Hi. No, I'm in a screen. You can't do that for me. Dang it. I don't know how to go back. No, I'm in a presentation, is what I'm saying. So I gotta come out of the presentation, but I don't know how to do that. I'm in Canva. So let me see. Watch later. Right, let me see. Let me go escape. There we go. I got it. I forgot where the keyboard was. That's why I was like, where's the keyboard at? Are they all off? That's why. Okay, thanks. Okay, thank you. Okay, Dennis, we about to do a money habitude game. And we got one person that want to play the card game. We also got computers. So I got another card game too if you want to do this one. We about to show. Okay. All right.
Money. What? No.
This money habitudes. We're going to learn about our habits and attitudes around money. Okay, here we go. Let's see.
Money habitudes.
Okay, that's what we're going to go with. All right, so you're going to go to moneyhabitudes.com and enter that code. I have my computer up, so I'll see when y'all start getting in there. And y'all can take the assessment online. So first you have to, once you get to everybody there on their phone, I don't know. I see that. No, it's not working on it necessarily. It's that you focus here. You are the man of the house, right? So now you take these yellows and you line them up by all of these, and then you take a picture of the yellow cards. That's your habitude.
So I take the yellows here.
Yeah, put them by each one, the security one, and it's information on both sides of the cards. Okay. So what do these cards mean? Not that one. Find the one for security.
Oh, I got you.
Yeah.
I see. This for planning.
Yep.
Status.
Yep.
I don't need to give you one.
I mean, you can look at it and see if that's something you want to do something different with. They got some suggestions on the back.
Security is so no, that's right on.
Yeah, these are me. Yes. One lady was retired. She was like, well, I have the right to be more spontaneous because I'm on retirement now and I did all my stuff. And because they were saying it was at a daycare. And the lady was like, oh, you do X, Y, Z. I said, remember there's no bad ones here. And she was like, yeah, I'm retired. I don't have little kids in my house. So if I want to go eat a steak tomorrow, I'm going to eat a steak tomorrow. I was like, I ain't mad at you. So that's why they said it's not good or bad or indifferent. It's just knowledge about yourself and your approach to money. Well, some things might surprise people. When they look at them, they be like, oh, snap. I didn't realize that I do that. Oh, yeah. Because I've trained in this, so I can. When I see people, yes, I'm like, oh, yeah, I can imagine. What was Terry? All day long. Yeah, almost all her cards was in there. The whole thing, right? Some unique things. Before we talk about money in an organization, we got to talk about money in person, right? Because you are a person in an organization over some money, but you operate with money like this. So who are the other people on your team? Because you will put some money on the ground for some status stuff, but you ain't got nothing in the cut for security, but you the treasurer, right? Uh-huh.
When it comes to events, but I know how to penny pinch with excellence.
Some people are excellent bargain shoppers, honey. I was trained by a bargain shopper. I like to bargain shop.
I do. I think it's
Just need the connection between
100% because you're a human.
Yeah. Your habits go with you.
Say it.
So you just made the connection on how you handle your personal finances and the connection and how you utilize it in the organization.
Absolutely.
Because you said because we're human, so my habits go where I go.
Your habits go where you go.
And I make organizational decisions based on my habit.
Or you argue with people because you see it a different way. You know what I'm saying? And so the meeting don't go like it should because the person over here don't take into consideration, and we don't really know other people's leanings, right?
That's right.
So we sitting in a meeting trying to figure out what is going on.
Yeah.
And look who we have running the money. Not that it's a bad thing, but now that you know, listen to the guys of these other individuals. Here you go. All right, people that played the card game. Did you take pictures of your yellow cards? All right, so I can take your pack from you? Yeah, for sure. We're going to let these ladies do the card game while we wrapping up talking about these. Nicole, sorry. From moneyhabitudes.com, I did a white paper for LISC Chicago, and one of the organizations that we interviewed used this Money Habitudes game for their financial literacy. So I did this. I found this out from researching for a white paper project that I was doing. And I found the company, talked to the people that did it in their organization. They raved about it. So I was like, I need to get this so I can see what's going on, right? And then I signed up and did the training with the organization. They had a free training. But I think the assessment is like maybe $20 an assessment. But because I'm a trainer, I get so many at a reduced cost and things like that. So, yeah, we got CJ, your name tag and sign in over there for me. All right, ladies. So we got a Money Habitudes. I got 3 decks. So with 3 people, y'all can have these 3 decks. This one. Money Habitudes is a game that talk about your habit and attitude around money. And so with the card game, they did an online assessment. It'll take y'all a while to get into that one, but y'all can still do that if you want to, so you can have the big thing, but we'll use the cards. It gives you the same info. DJ, you see your name on there? You ain't got to put them back together, Dennis. You can just show. Yeah. You like it? Very interesting, right? Download your assessment. Download your assessment. I don't get your assessment. Good, I'm glad. Download your assessment if you did it on your online process. And you want to sit? You want to sit right here? That's where you can see the best. Or you want to sit over here by Dennis? No, okay. All right, have a seat. All right. So let me go through with them, and then we just have a brief breakdown until Darlene gets here. So, with the card game, you're going to go through the cards, pull out the blue cards, and pull out the yellow cards. Yep. It says, that's me, not me, something like that. That's all 3 of them. I think that's all of them. Then pull out the yellow cards. Not those ones. The yellow, these ones. Yep.
Oh, we need glasses.
Yeah. It should be not these ones. Sorry. Take out these blue ones and then take out the yellow ones that look like that. Okay. You don't got to read them yet. You're going to take a picture of that with your phone. That's late. Put that over on the side. The yellow ones, put them on the side. You got the blue ones, line the blue ones up. Then you're going to, flip all these cards over. You're going to take out that's me, that's not me, and that's me. It's when they say that's me, when they say that's not me, flip your cards over. Like the whole deck. Yeah. Spin them around and see if you see the blue ones. Where's the other blue one? Sometimes that's me. It depends, and that's me. It should be a card that says that's me. Flip them over again. Let me see. Is it another blue card somewhere? Oh, you got it. Okay. All right. So the white cards. Yep. All right. So the white cards. This deck upside down. You're going to read these cards and you're going to put them in a pile. That's me. That's not me. Sometimes it depends. So it'll take you about 10 minutes. You're going to read the card and say, this is me. This is not me. Sometimes that's me. You're just going to line them up like that.
Oh, we telling on ourselves.
You learning your money habit and attitude. Because if you manage your money, if you manage your business money the way you manage your personal money, and you may be out of order in some areas, or you may have some biases that you're not aware of. And so money habitudes is your habit and attitude about money. If you don't know about you, we can't talk about the business finances. So you're going to read through these cards and put them in, stack them in the piles. All right, while they're doing that so they can learn, what did this game reveal about yourself?
It told me everything I already knew.
Okay. Did it tell you your areas where you could build up some other skills?
Yeah. Mm-hmm.
Did you look at the things that you're not as high in? Are they things that you desire to be higher in? Because you may have a habit, but it may not be a good habit. A habit is just something you do over and over again, right? That don't mean it's great for you. Where is the mic at?
It showed me that I was more balanced.
Oh, it's over here. Oh, that's a good thing. Hold on. Here we go. Yep. Let me see what you get. Oh, you got planning. Hey.
Yeah, this kind of shocked me, though.
You like status? You don't think you like status?
I'm not going to totally agree because I do like me a good Coach bag, a good Kate Spade, a fake Louis because that's, a down payment for a car.
Correct.
But I could see with a little tinge bit shock.
Okay, that's fair. And what about that giving space?
When I was younger, honestly, that probably would have been over here.
Okay,
I done got real selfish. To God be the glory.
She said, "To God be the glory," because I'm selfish.
I had to learn the hard way though, because I would give people stuff, and then that'd be me sitting back like, dang, I should have paid my phone bill.
Oh, okay.
So yeah, I had to learn the hard way.
So you have learned it and overcorrected. Mm-hmm. So is there a space, because you in a nonprofit space, we are givers because we're giving our time for free. We give our time is a huge resource.
Yeah, time is a currency that can't be replaced.
Exactly.
And I tell people that all the time. Like, I'll give, but now I'm real scrutinizing.
It's good to be scrutinizing with your time, talent, and treasure, because in the word it talks about throwing your pearls after swine. Mm-hmm. So maybe you saw the swine area a lot in your younger life, but you now call everybody a swine, and everybody ain't a swine. Right, so you overcorrected, like, I ain't giving you nothing. Right? So she don't have one card in giving. She don't have that one card in. She's like, I don't do that. I was like, dang, that's clean. So you're an overcorrected, right? So how can you move yourself back into that space a little bit? Find the good places to give. Let me pass the mic. Hold on.
Mm-hmm. The status part, though, probably is like myself. I had one card of status. I just like nice things. I don't care how much it costs, but I like to look nice. I like to feel nice. I can dress out of Walmart and you never know. Like, literally.
I like a bargain.
And that's my thing.
I don't really wear names. I wear Crystal.
I'm
not a name person at all.
I'm a shoe person. Now, I see that you like purses. Mm-hmm. That's just your thing. I don't think it has any reflection, because it's just you like those nice things for you. And more so for me, I feel like I've earned it. Right. I've worked hard enough. But now I still am a bargain shopper, that when I go and spend, even for me, I want to get a good deal. Because now the back of my mind says, if I get a good deal, the $20 that I'm going to spend, if I can get a deal, I can buy something for 10 and then have 10 to give somebody else in some shape or form.
But you had how many in giving?
So there, I had 5 in giving.
She's a giver.
But see, I'll give away my old coach bags that I'm not using.
That's nice.
Like when I moved here, I had a bunch of coach bags that I just don't wear for whatever reason. I gave them all to my church, and they was like, "You don't want them? You could sell them on the marketplace. Ain't nobody got time for that."
That's nice.
Like here,
so you still got some giving.
But then I'm like,
but now when you answer these questions,
like you will never find me at the Coach store. Yeah. I'm not spending $400 for a bag when I can go to the outlet and get it for $100.
Yeah. That's just being
I'm not
frugal.
doing that.
Thank you. Anybody else? I can see. Yeah, that's funny. Here you go. What about you, Berdina?
So mine was more of the planning, which is true.
Okay.
What I think I had nothing for spontaneous, and I would like to be a little bit more spontaneous.
Okay.
What I normally do when I go shopping, if I see something, I'll put it in my cart, but then I'll, as I'm like going around, like, I don't need this. Then I put it out. Yeah,
I hear you.
So I just like, I think that was the only thing that
you have no carefree.
No, definitely not that at all.
Mostly a planner.
Yeah,
a little bit of status and a little bit of security. Talk about the spontaneous and how could you see yourself adding? Hi, come on in. How could you see yourself adding some spontaneity in as you approach retirement? As you consider having some things that you have planned for 30 years in a career.
That is true. But with the county now, it's 32.
Yeah, it is.
So, but I have planned to stick with 30. So, if I choose, then I can work to 32.
Right. But what about the spontaneity part? What is there something that you could pull in and say, I want to do something on a whim. I've planned a lot. Or you still want to stick with the planning? Or do you feel like you're missing anything? Do you feel okay in that space? Do you say, I need a vacation. It's time for me to get up and go somewhere?
Well, see, I go on a vacation every year.
Oh, but you plan for it.
Exactly.
Okay. So you ain't missing no vacation. She's like, I ain't missing no vacation. I ain't missing nothing.
But when I go on vacation, I think that's when I do a little bit more spontaneous.
Okay.
Because that is not, that's part
she of the spontaneously planning. Uses her spontaneous budget only on vacation. Very good. Something good to know. Anybody else?
Before I woke up, like literally one day I woke up at 5 o'clock in the morning.
And then you're going to turn these over and categorize them. Okay. So where's your, this is me.
Like I've done that so many times.
And I think
that's the only one you're working with. Flip them over and line them up. Okay, you done? Still going?
When I go.
That's so funny. All right, Miss Rolanda gonna tell us about hers. Tell us what yours. Let me see. I can pull it up. Tell us.
You pulling me up?
Oh, I got you.
Okay, so I think a lot of it has to do with your life experiences, and for me, aging a little bit and just watching others in my life age and different things that happen. So I used to believe in working, retiring, the big house, and having set up your nest egg for yourself when you get old. Mm-hmm. And so I've watched like 3 people that in my life that was well off, and they lived that. And in their aging process, it was not like that, because the house ended up, my mother-in-law, she ended up in a nursing home, and her house that she went back to Mississippi to build, it ends up getting taken by the nursing home. And it's like, okay, hold on. And I watched that with my mom's mom. And so it's like, okay, that's not going to happen to me.
I know that's right.
Okay, so I'm going to have to figure this
out.
And so, yes. And so, you really start to learn things. And so I am very frugal, and I am very interested in where my money go. I think sometimes you reach an age where, you don't need a whole lot of stuff. Because for me, I don't need stuff. I don't need near another bag. I don't need near another pair of shoes. I don't need nothing. Now a good vacation I want, but I want to be able to go where I want to go, and I want to be able to be comfortable and spend whatever I want to spend when I'm there.
Okay.
So that's why I have to budget for that, because I want to go to Iceland.
Yeah.
That's gonna be my
nice.
next.
I'll go to Iceland with you. I want to see the Northern Lights real bad.
Yes. So I think that's kind of nice.
Yeah, the one that got the most. Thank you. All right, for the ladies that are still doing their cards, we got on the yellow over here. You still looking at yours, okay? So once you get done, you're gonna move all the ones away except for the that's me pile. Then you're gonna turn these over and categorize them, and then you're gonna put the yellow cards up against them. Take a picture of the yellow cards. Take a picture of the back of the yellow cards, because those are the ones that are you. The one that has the most in it. One that has the most in it. Okay, our speaker of the hour is here. Let me move. Nope, not for right now. We'll come back to the computers later. Darlene Knapp, my friend. I'm gonna give you a mic.
Yeah. So, as Crystal mentioned, I'm Darlene Knapp. I am a CPA. I've been a CPA for 28 years. I have my own business. I started out working for a couple other firms after I got my CPA license, and then just started my company. Well, it's been 15 years already. So we specialize in individual taxes, business taxes, bookkeeping, accounting. My passion is, and what most of my talk is going to be on, is keeping good financial records, keeping good financial statements. What do you as a nonprofit and board members want to see, and what do you care about with finances? So, the being on a board, a lot of people just say, I'm not a financial person, I don't know the numbers, but it is your fiscal responsibility to know the numbers and to help the organization. So that's going to be the majority of my talk, but so are most people in here, just to kind of get a read of the room, is everybody have their own nonprofit or on a board?
On a board or founders of organizations. That's the boot camp is for. We have 5 organizations that was represented. We wrote a grant together.
Okay.
And then we have other organizations that are tied to those, like people that are tied to the main organizations, but they have their own organization. So we have a few guests that came in as well, but either it's them and their treasurer, or people that want to be on boards even.
Got it.
Yep.
Okay, perfect. So the first big question normally is, how long do I need to keep records? So that was like kind of the first thing. I think it's on the left side of your packet. It's pretty lengthy, but any question you have about how long to keep records, it is all listed in there. So it deals with check registers, bank statements, tax returns, obviously things like your incorporation documents, your federal ID number. Those things need to be kept forever. Don't ever throw those things away. But in the P in there means permanently. So the IRS is saying tax returns normally, they say permanently, but I don't know a person that's kept tax returns for honestly more than 10 years. But, just to look back, you should really have the copies of your tax returns. So, but that is it's many pages, but it's pretty detailed. If you have a question, that's how long really you should keep records. After that, you can shred them. You can do whatever you want with them. You don't need to keep them after those time frames. So that's like a big question I normally get. And and especially with nonprofits, because the board changes over. You're not always going to have the same president, treasurer, vice president. So it's really important to have a really good system of keeping records and books. So next thing is, I'm sure everybody knows, but there's a lot of different kinds of nonprofits. So there's 501c3, which I'm assuming most of you are probably 501c3. So that's exempt organizations, religious organizations, educational, anybody that is able, people, when they contribute to you, they can take a charitable write-off. There's a misconception out there. There are some other entities like a C6, a C5, they're social organizations. If you donate to one of those organizations, or if someone is just an individual, you do not get a charitable write-off for that. So it must be very, very clear. You must always have your 501c3 documentation if people donate to you, and you cannot solicit if you're not a 501c3. You cannot solicit for a donation. So there is some confusion, and especially, and you want to use all of your benefits of being a 501c3 exempt from sales tax. A lot of people kind of forget that. If you're any other type of organization, you still have to pay sales tax when you buy materials. So if you're buying anything, make sure you have your certificate of exemption and you show that, and you don't pay sales tax when you buy materials. So anything you're buying, nothing.
Right. But people never go to the store. Talk about that at the store.
Yeah.
All right. Talk about that at the store, what they need.
Well, you need to fill out from the state of Ohio, there's like a blanket certificate of exemption. And you need to usually have, do they usually have to bring your exemption certificate? Like your thing from the IRS that says you are and applied for an exempt organization. Some stores, I know they keep it on file. Sometimes you have to have that every time. So make sure you have that with you when you're buying major purchases or online purchases. So that way you're taking all those benefits and you're not, that's a big savings. I mean, Lucas County is 7.75% of all your purchases right now. So make sure you have those things when you're going to make a big purchase. Yeah. And questions anytime, please. Right
here,
now.
Mike. We got a mic so they can hear them.
Oh, okay.
Pass it around, ladies and gentlemen.
Wonder if you know somebody who was asking for donations and they are not a 501c3.
If I've seen it done before, or because I'm a tax person, here's what I get all the time is, I donated to a needy family, which is a wonderful thing to do, but I have to be the bad person and say, you can't get a deduction for that. Wow. If there's a Facebook campaign or a social media campaign saying this person lost all the contents of their home burnt down, you cannot take a write-off for that. They are not a 501c3 organization. So I see that all the time. And I don't think when they're soliciting, they expect people to get a donation. But again, you just have to remember that if they're not a 501c3, you cannot take a tax deduction. But I have seen people solicit and it usually happens when they're waiting for their approval from the IRS, because as you know, it can take 6 months, 9 months. So they're still operating even though they're not officially a 501c3.
Well, this is an organization that I know that their 501c3 is defunct now. Oh, okay. And they're still asking and soliciting donations from people.
And they can definitely lose their nonprofit status if they continue to do that. If they were found out by the IRS, So the IRS would have to, yeah. And I mean, speaking of that too, the IRS the state of Ohio, every 5 years, you have to redo your charter. So the important thing of always keeping information updated with the IRS, if you move, your contact person, again, I see this all the time with boards changing over. You may get a letter saying, hey, your state of Ohio charter has expired and you have to renew that. Well, maybe it went to 3 treasurers ago. So just remember, when the board's switching over, you always change that information with the state of Ohio or Michigan, whichever, and also the federal government. So if you don't file, like say that's defunct because they haven't filed their tax return, I think after 2 years, if you don't file a 990, your tax return, it will automatically, you will lose your exempt status. Is it 3? Okay, 3 years. So you don't ever want to do that, because if you remember the process of going through to get it, it's, pretty lengthy. So it's expensive. Yes. Yeah. A while ago, 5-6 years ago, they had something where if you were a small nonprofit, you could just go online, you could fill out maybe 2 pages of questions and you can get your exempt status. They took that away. I don't know what that was called. It might have been a pilot program they were trying or something, but that was really nice. I did that for a couple people. Yeah.
Here you go.
Your thoughts on employees soliciting on behalf of the 501 or the business?
Employees that are employed by the 501c3? And what specifically you mean? So if they're...
I'll give you a scenario, because of my employer, and they took the initiative to put on their social media that we were looking for donations for large adult men and women.
Okay.
But because the employee did not get that clearance, she was terminated. So I was just going to ask, what was your feelings on that? And is it okay for employees to?
I mean, as long as you're representing, as long as ultimately the funds that you're soliciting are going to go to that 501c3, I don't think that's a problem. I think that's more of a, when you're writing up your, board documents and, what can board of members do? I think that's more that, are they allowed to do that? And obviously they were not because they were terminated. So, but if they're allowed to do it and they're soliciting on behalf of the 501c3 and they're not taking the funds in, that's okay.
Well, it's not legally incorrect.
It's just more of no, it's more of a, what are board members allowed to do? Correct. Yeah. So I mentioned about filing the 990 form, and there's 3 different types of 990s. So it depends on the gross receipt level. So not net, so it's your gross income that you have coming in. That's from grants, that's from individual donations, business donations, any amount of revenue. If it's less than or equal to 50,000, you can do an online postcard. It's a 990N. You can go on to the IRS website. It's a really simple filing. It takes half hour and you don't pay any fees or anything. You go right on and you can file that report. That's the easiest thing. A lot of times you don't even need a CPA to do that. I do that for some clients, but I tell them, hey, this is easy enough. I don't need to charge you. You can probably do it online yourself. But when you get over 50,000 and just below 200,000, you have to do a 990EZ form. So a 990EZ is a 990 reporting that you usually will have a CPA or a tax person do, but it's a little 4 or 5 pages versus 20 with the full 990. So just make sure you're watching your gross receipt level and you know which report to file, because then when you get over the 200,000 and total assets greater than 500,000, you have to file the full-blown 990. Full-blown 990 it has about 5 pages of questions, asks about all your board documents, asks for all of your officers, it asks, if anyone's paid, you have to report all that compensation. So now everything is public information. So the reason we want these reports is if someone's looking to donate to your organization, if they're looking to join your board, they can go out and they can look at your 990 filing. So you want it to be as accurate as possible. You want to report, how much you have in grants and how much you have in where you're spending your money. Where are those expenses going? I used to hear a general rule, and I don't really say the percentage anymore, but obviously you want your administrative costs pretty low. You want your program costs and fees higher than your administrative costs, obviously, because it just looks like you're spending the money more responsibly if it's not administrative costs. So if I'm looking to contribute to an organization, I'm going to look, say, 80% is they're spending the money on the program. That means all the funds that you're contributing are going to the program expenses is what people are looking for. So you want to be sure you're always watching those percentages. And when you're reporting, you look at those things. And there's a fundraising component too. Obviously, all nonprofits survive by donations, fundraising, events, and that's how the money keeps coming into the organization. So just make sure you're kind of always watching those percentages. The other thing is, as far as reporting, is Ohio Attorney General. So a lot of times I see nonprofits coming to me and they have never filed with the Ohio Attorney General because they didn't know about it. They just didn't even know that existed, that you have to do that. So you have to register.
They know now.
Now you know now. Okay, good. Yeah. Nice. And again, it's based on, now this is based on your asset level. So if it's less than 25,000, there's no fees, but you still have to report. If it's 25,000 to 100,000, you have to pay $50. And then it goes up from there, 100,000 to 500,000, $100, 500,000 or more, 200. So still the fee is not that great. But again, it's just another thing you have to remember to do each year. When you file your 990, just jump on to that Ohio Attorney General username, password, and just file that report.
And you say the due date?
The due date is May 15th. If you're a calendar year for a 990, it's always due May 15th. So if your year ends December 31st, you always file by May 15th. And same with the Attorney General. Now, if you extend, let's say you don't get it done by May 15th, we extend some 990s because we just finished up tax season. So that also automatically extends the charitable reporting. So for Ohio, you don't need to do a separate extension. It just automatically extends. You'll still get your little reminder email or your reminder postcard, but just know that if you've extended federal, that's extended. So you can wait to do that. So
I have one question.
Yeah.
What if you are like Maumee Bay is July 1 through June 30? So our tax return is June 30, 2023. So when we do the charitable registration, we're doing it 22-23 year because we do 23-24. We're in that year now. So is ours also due on May 15th?
It's not 5 months. So if it's June 30, you got July, August, September, October, November 15th.
I should have did it by November 15th. We're gonna get in trouble.
15th.
We turned in our 990 on November 15th, but we didn't do the charitable registration.
Okay.
We're gonna be behind.
I've reported for some people late. Just go on and report.
It's our first time doing this where they never did it before. We never had it.
You never had to do it. So I would just go on and report late.
Okay, I'm gonna do it. Okay.
I don't know if they'll charge. I don't know if they're gonna charge like a fee. Like an extra fee. Okay. But it'll tack it on. When you go to check out,
I'll check it out.
If they charge a penalty.
Okay.
Yeah, so
because we had some funds. That was our first year. I know they never did it before because we wasn't registered before.
Okay. So you never did it before.
I have a question that might be a little off, but I just had a question. As far as when would you recommend hiring a CPA? Like say like with my nonprofit is small.
Okay.
So we don't really have like that.
So you're under that 50,000 right now.
Yeah. What would you recommend for us to hire?
Usually, if you're managing your books and records, okay, because two things a CPA or an accountant can help you with is managing your books and records. Let's say you don't have a treasurer or an officer who's really good with numbers. They could do that for you. They can manage a QuickBooks file or something like that. And we're going to get into that a little later on how you can keep your books and records. But I think once you get to that level where you have to actually do a 990 EZ or a 990 is probably when to hire a CPA. Yeah. So
here you go.
What's the average? Is it a monthly cost for a CPA?
It depends on what they're doing. It depends on what we're doing. So if we're doing bookkeeping, it would be a monthly fee.
Okay.
And if you're now, the best thing to do is get someone on your board that's an accountant. Yep. I'm on a couple boards and I don't charge because I just donate my services. So I donate my services to that board. So me as a board member, that's the best thing to do.
Okay.
Is get someone on your board that can do that for you, and they know how to do it. They can donate their services or they can charge the board like a minimum fee. But it's usually just a yearly fee if we're just doing the 990. If we're just doing the nonprofit return, it's a yearly. Okay. So if we're doing the Attorney General reporting and the 990, like every May, let's say you're a calendar, it will be a yearly fee. If we're doing books and records, like if you need financial statements for every board meeting, it'll be a monthly charge.
Right. What about was asking Chris about the QuickBooks?
Yes.
Is that something that's maintained monthly or yearly or every quarter?
I recommend definitely monthly. Definitely monthly with QuickBooks at a minimum. Sometimes if you have a treasurer that's savvy with QuickBooks, I would say they should be doing it probably weekly. But, sit down, do your bookkeeping maybe weekly, at least monthly. Because it's very important at every board meeting. Does everybody meet once a month on the board or does it quarterly? Quarterly. You always want a financial update on your financials at every board meeting. Okay. So you may pay an accountant quarterly if you only need financials quarterly. And it also depends on how many transactions you have. So sometimes if you're starting out, if you're smaller, you don't have a lot of transactions running through the bank account. So you can do it less often. But I recommend anytime you want to jump online to look at your bank account, as we know, there's lots of fraud and someone could hack into your bank account. So at least weekly look at that bank account and make sure nothing crazy is going on. So, and make sure you have a separate bank account. I'm sure that's like 101 accounting, a separate bank account for the nonprofit. Don't intermix it with personal or anything like that. Just have a separate business bank account. So the next topic is activities that may jeopardize an organization's tax exempt status. We talked about one, not filing a return. That is going to revoke your exemption status, and we don't ever want to do that. Some of these are pretty, not having a prohibited inurement, which includes like payment of unreasonable compensation to an officer. You don't want to pay an officer too much money. That's just, you're not fiscally being responsible for the organization if your expenses are way out of whack. Or you go out and you go out and buy a Mercedes and you put that into the nonprofit. That's not going to be, or you're excessively traveling within, but some organizations, that is their exempt purpose. If you're traveling to foreign countries and doing your exempt purpose there, that is perfectly normal. But if your organization really operates in the state of Ohio and you're traveling abroad, it's just not being fiscally responsible. So that's pretty common sense. Next one is if you're just stay away from any political campaign activities. Don't do anything political. Don't donate to a state of Ohio party. Don't represent any sort of party unless that is your exempt purpose to do so, like a political action committee. But if you're a 501c3, just steer clear of any political or legislative activities is basically. They don't want you, or soliciting, if you're not fully a 501c3 yet, do not solicit for donations. So, and really only 501c3 organizations can run like at your events and things. Like let's say you have a liquor wagon, or let's say you have bingo activities. You have to really be careful on some of the activities that you do. Some organizations are not allowed to do those activities. So make sure before you're putting on a fundraiser, some people can't have a raffle. If you're not a 501c3, you can't do raffles. So the nice thing about a 501c3 is they can do more of these fundraising activities, but just watch, make sure that you're able to do it before you put on this big fundraiser and say, hey, we're going to do this. So has anyone also heard of, so sometimes also to raise money, because obviously all, nonprofits, that's how you survive. You're raising, let's say your donations are down, you're looking for other fundraising opportunities. There's something called unrelated business taxable income, which you may not even know is happening until you work with a CPA and they say, hey, this is something that maybe you might have to pay tax on, because an unrelated business taxable income activity is something that constitutes a trade or business. It's regularly carried on, and it is not substantially related to the organization's exempt purpose. Okay, this could be, what I've seen is, let's say you have a location, you're an exempt organization, you're a educational nonprofit, but yet you have a store, a retail store, that you're running out of that particular space. That is unrelated business taxable income in most cases. So, and again, it's a gray area. Sometimes it is for one person, it's not for another. You just have to be careful that and you can do it. You just have to report. It's a 990T schedule, and you actually have to pay income tax because it's a trade or business. You're getting outside of your exempt purpose, so now you have to pay tax on that piece of that revenue coming in.
I have a question, because we talk about economic drivers for nonprofits all the time.
Yep.
And so this is being set up to be an economic driver for Maumee Bay Club, but it's part of our mission. We educate community about, things that uplift the community. So is this like that? Like if we started charging for this boot camp, we got a grant for this first one, but if we did this next year and we charge $25 a session, is that unrelated, or is that?
I think that's still related.
Still related.
I think that's still related.
But if you sell T-shirts, that's
and now there are some exceptions. Like you can still, if selling of the T-shirts, selling of the merch is done at an event, that is okay. Okay. We're talking about, you have a store that other people, not members of the nonprofit, can come in and look. and another part that is a rental activity. So let's say you have a space and you rent that out to someone else. You rent it out to maybe someone that's not part of your board, not a member. That can be unrelated business taxable income because you're actually generating a profit from that rental, and that is not your exempt purpose.
Right.
So again, you can sell merchandise at events anytime you want. Anytime you could bring merchandise here at this boot camp, and that's totally fine.
Okay.
And that's all part of your exempt purpose. You do it anytime outside of that, then we could get into that 990T situation. Yes.
Oh.
Yes.
Okay. So, okay, now this might be a little technical.
Okay.
I'm going to try to go
do
slow.
my best. Okay.
So I utilize square footage of my apartment for my business.
Okay.
If I sell merchandise, my branding, and it comes out of my home for a fundraiser, is that taxable in this category?
Because you just mentioned it's for a fundraiser. So I don't think for a fundraiser, if you're tying it to a fundraiser, I don't think it's unrelated. If you sold that, I'm thinking if you sold that merchandise outside of a fundraiser, you just solicited, you put out an ad on Facebook and you just said, hey, I have this merchandise to sell, then that's going to be taxable.
Like if it wasn't her t-shirt, like if it don't have her logo on it and she just sells shirts.
Correct. If you're not selling the merchandise that is branded to the organization and it's not tied to some sort of fundraiser or an event, right. It's not, then I believe it would be subject to the taxable income. So,
okay.
Yeah.
Okay.
Now, and I know one of the big things is a lot of nonprofits are running like online stores to sell their brands and to sell all of that. I haven't really researched all of that to see, because again, general public can go on that and they can order that merchandise. I have not researched that fully or saw any court cases. A lot of times we look in the IRS and say, has there been a court case about this? I have not seen any of that so far. Sometimes to me, I think, again, if it's not tied to some sort of fundraiser, I don't know, they could be running a risk that could be unrelated taxable income. And then you also, if you're selling merchandise, you have to get into paying sales tax or charging sales tax. So if you're just selling the merchandise, you would have to collect sales tax, remit sales tax. So you're kind of getting into a whole new tax collection area. So, and again, It's a nice fun rate, and again, so your profit would be whatever you pay for the merchandise versus what you sell it for. Is it worth having to register for sales tax and maybe pay that unrelated business taxable income on that?
Okay.
So, yeah.
Okay.
All right.
Yeah.
So what if nonprofits get into, let's just say a church? I use that, but they get into property to help the low income in housing.
Okay.
And but charging rent, is that considered income or
like that taxable income, unrelated business taxable income?
Yes.
So your exempt purpose, your church. So your exempt purpose is church functions. I don't know. That's a good one. I don't know 100% on that. I would have to do a little bit of research to see if that is something that is tied to your exempt purpose or not. So you might have to check your bylaws as well, and whatever it says in your bylaws, hey, this is our exempt purpose, maybe you could branch out into that area as well. So because it is part of a religious activity to help the community, so you could tie it into your exempt purpose, but your bylaws might need to be amended, and maybe that's the way you get around that. So just a little tidbit of information that's and
yeah. You have a question and you got a CPA here that's gonna answer the question.
Yeah. No. I just know churches that do have property. They buy property. They buy houses and for the low income, and they buy land and plant like gardens and stuff, and it'd be for the church. So I don't know if it's the bylaws, but I know a lot of churches are doing that. I just want to add that to them.
Yeah, right. And that's interesting. Yeah, I don't know that answer 100% to see. So, so the other thing, I'm going to kind of just read from my notes here too. So when, again, being on a board is very, a very big opportunity for someone. Let's say you're searching for new board members. You want to find board members that are going to take it, that they're going to take it seriously. So you're going to have to make sure that they're fiscally responsible, make sure they know what they're supposed to be doing on the board, make sure they're coming to the board meetings, and make sure they're properly representing the organizations. So it says here, agreeing to serve on a board comes with a great deal of responsibility and can prove highly satisfying. Before accepting such position, a prospective board member should learn more about the commitment involved so they understand the role. A board's legal duties, trustees and directors of charitable organizations have fiduciary obligations to ensure that the mission of the organization is honored and that the group's resources are used wisely. Then, and the biggest thing is knowing what your duties are as far as duty of care, duty of loyalty, duty of compliance, and duty to maintain account. So a lot of times when you're sitting in a board meeting, or I go into certain board meetings and I come in and I present the financial statements. Sometimes you look around and you're like, I don't know if they're really understanding. They really need to have knowledge, even though you're not a financial person. You really need to have knowledge of these activities, because how you're responsible for also generating ideas on how to generate more revenue. How can you cut costs? How can you increase revenue? Those are your responsibilities of a board member, and everybody has different strengths. So you want to, when you're searching for new board members, you don't want to just put bodies on the board. You want to really say, hey, we need an attorney, I think. Hey, we need a CPA. So maybe you're kind of shopping around professions to be on the board to help that organization. So it's really important to get the right board so that you as the executive director or you as the president, you're not doing all the work. You really need to be leaning on your board to do the work. So you might even write up something on some boards. I know, when you induct the board member in, you're kind of reading up, like they're saying, yes, I will do this. I will do this. Like you write up a little induction and they'll say, these are my duties. And yes, I will adhere to these duties. So, yes.
Okay. How do you think you can make a position on the board look appealing and not look like it's going to be something that's going to overwork somebody?
Right. Well, I think the biggest thing, because everybody's busy. Every time you're trying to say, hey, we need board members, everyone's like, well, what is my commitment? That's like the first question they're going to ask. What's my time commitment? I like the idea of boards moving. I like the quarterly meetings versus the every month. Honestly, I'm on a board right now that's every month, and then I'm on a board that meets quarterly. Love the quarterly. Exactly. I mean, just because everybody is busy. What I also see boards doing is they divide up into different committees, and you have a certain role and expectation. So when you join the board, you say it's mandatory that you attend 6 board meetings a year. You have to either volunteer or man 3 events. I mean, I'm just saying, so that people know exactly, you have a written up agreement that says every board member must do this. So they know the expectations coming in. So, because what happens and what really the board just kind of dissolves if one person's always doing every single event, one person's always volunteering all of their time. So if you just say, just to be part of this board, these are the things you have to do, and they know the expectations up front. And also running the board meetings, if you say the board meeting is an hour, you keep that board meeting to an hour. That's the other big thing. Sometimes you're sitting in a meeting and you're not talking about things that should be talked about at a board meeting. You get on side conversations, and that's great. Everybody's friends, but maybe save that for after. Someone has to keep that meeting running. If someone's time is an hour, you got to keep it to an hour. So you can tell them, we meet every quarter. We keep the board meetings to an hour. These are, you have to man 2 events or kind of maybe volunteer at 2 events. And Some people even make a board member pay or at least sponsor an event as well. It just depends on what you want to do with that. But I think, and it is hard. And I mean, it's hard to maintain. Everybody's schedule gets busy. Sometimes you get someone on the board and they leave 6 months after that. But you can tell them the benefits of what they get out of it as well. So they can also donate services. They don't have to, but you know, if you're looking for different attorneys, sometimes you need an attorney to rely on and, you know, figure out if you're doing the right thing. So that kind of answer questions.
It does, and I'm also leaning more towards solidifying events. Like now, I'm getting ready to do a fundraiser for my organization, but I'm only going to do it every 5 years.
Okay.
But I'm going to put a ticket price on there that's worth it.
Right.
$125 ticket for the event, but I'm having the people share. Don't look at it as $125 ticket versus you donating $25 every year, because we're only doing it every 5 years.
Right. And I mean, on that point, that's a good point of not having too many fundraisers as well, because then people get burnt out.
Correct.
People get burnt out. You should have 1 or 2 major fundraisers. Usually people like have one anchor fundraiser, and they say this is our biggest moneymaker, and then maybe we do some. You know, the chambers have like their job fairs, or chambers have their where you can buy a booth. Maybe you have a few of those. The Monroe County Fair has something where you can buy a booth. Those are more to just get your name out there. Those aren't going to be like major dollar generating activities. So you still need enough activities to get your name out there, get the awareness out there, but then you need a big anchor fundraiser.
So I've always been confused on what's the difference between when they say a fundraiser versus a capital something.
Oh, capital campaign.
Capital campaign. What's the difference?
Well, a fundraiser is normally some sort of event, like a golf outing, a silent auction, when there's actually physical presence. I guess this is how I differentiate it. A capital campaign could be, you look through everybody that's donated to you in the past, individuals, businesses, and you can send out a letter saying, you can either do it on social media, or you can send out a letter saying, we're doing this capital campaign. You can donate to us over the next 5 years, or a big yearly deduction, and how much do you want to donate? And you usually have an envelope, and they can send money back to you. It's very little contact with any board member. It's just administratively, you have to send out all those letters, or put all of that out on, or email, or however you're doing it.
Okay.
That's, I guess, what I think more of a capital campaign is versus a fundraiser.
And they funding a large activity.
Yeah.
Right? It's like we're trying to build a building, or we're trying to fund our new blah, blah.
Yep. You know. Trying to do this new, I get it a lot from like our church, and it says, we're doing a new wing at the church, and we want we want to see if you can donate over the next few years. And what you commit to that, you pledge that donation basically. So you want to get people's commitment, like for the next 3 years, I'm going to get $500 or something each year. So you know that those funds are coming in. And now with charity, a lot of times people aren't getting a tax deduction anymore. So charitable organizations are suffering because it shouldn't be the reason that you're donating, but it was always a good benefit when the IRS said, hey, we're going to increase the standard deduction, and we're not going to let people itemize, pretty much, because you have to have a lot of itemized deductions. If you're a joint couple, it's almost $30,000. So you have to have a lot of charity, a lot of medical, a lot of mortgage interest. So that has hurt a lot of the donations. But what you could do with this capital campaign is you could kind of put that in your letter. I've done it for some of our nonprofits, and I say, hey, if you're looking, instead of giving me $5,000 1 year, why don't you give us $15,000? I mean, not everyone can do this, but I'm saying give us $15,000 this year, and you can take that right off on your tax return. So they could get over that threshold of doing a standard deduction. So soliciting for people that are high dollar donators, you can say, if you want a tax deduction, talk to your CPA. but they'll tell you what you can contribute to this organization and take a tax deduction for it. So it's helping some organizations again, and these are more like bigger business donations. Let's say they've given $5,000 in the past, they could triple that and benefit them on their tax return. So, and that's more money coming into the organization. So also, this wasn't really on my agenda, but you can also work with, let's say you had a financial advisor on your board. You could work with them and they could write up a little letter at year end. If you do like a year end letter saying, hey, we're here. If you're putting your budget together, keep us in mind to send us donations. You can take if you're of age to take your required minimum distribution, so you're taking your IRA distribution, you can donate that right to a charity. And a lot of people that, they don't need that money to live on, they have to take that money. And if they want to donate it right to a charity, they can do that. So it's also educating people. This is how you really could contribute to our organization. So
I need you on my team.
I like this account. Yeah.
Anybody else?
I think this last part, we'll definitely get into the financial statements. There's a lot in your packet on the right side. I pulled this just off of the internet because I just didn't want to use anyone's specific numbers. But I always get the question too, what reports is my board interested in looking at, or what should I bring to every board meeting? I've seen where sometimes you just bring the check register or something, and it's okay, or maybe you bring a bank statement, but nobody can see from a bank statement or a check register what is going on with that organization. So usually the top reports are going to be, they're going to want to know a statement of financial position. That's also called a balance sheet. So they want to know, how much cash do we have in the organization? Where is our cash? What banks is our cash at? Where, do we have a money market account? Do we have an investment account? They can look at like, hey, you have $50,000 sitting in your bank account. Why don't you open a money market account so you can get some more interest? Yeah. So if you don't bring that information to the board as the treasurer, no one's going to be able to bring those suggestions. So you always want to report cash balances.
We looking on the other side.
Yes.
On the other side of your thing.
On the other side,
financial statements. Yep.
There's the financial statements. So that's the first thing is balance sheet. It talks about cash. Most of the time, if you had any loans or anything like that, which you may not, it'll reflect that as well. And then the other big thing that most people want to see is the statement of activity. That's what happened since we last met, basically. So did we have a major fundraiser? Did we have an event? Did we have a golf outing? How much did that golf outing make? Because a lot of these things are going to be, we want to see what income's coming in, what expenses are being paid out, and how much do we have left over. Let's say the golf outing, and it, again, events are so saturated. Everybody, you could go to probably an event every single night. You get invites to every single event, and not everybody can go to every event. So if you see that over the last 3 years, the golf outing's only making a couple $1,000s, do you want to put all that time and effort into another golf outing? Or is it time to look for another fundraiser? So these are the types of things, instead of at the board meeting going through every single number on these statements, what should be brought to the table is, hey, golf outing last year made $8,000, it only made $2,000. Why? What happened? How can we improve it for next year? So those are the types of things that the board will be interested in discussing versus just reporting on the numbers. And if you want to make sure that information is brought so that you can get suggestions on how to improve for the future, or maybe create another event. So, and it's a statement of cash flow. I see that's the next one that's in the packet. That's just going to show you, and I don't see a lot of these coming into board meetings because they're a lot of smaller nonprofits really don't get into the statement of cash flow. But the difference between a cash flow and your bottom line net income. So if you look at your income less expenses, and that's $100,000. A lot of people the first question is, why don't we have $100,000 sitting in our bank account? I get that all the time. Cash flow is going to say, well, because we We owed $20,000 on our credit card because we had a big fundraiser, so we had to pay that off. So that's reflected on that other report. So that's $20,000 less. Maybe, maybe we had to buy tables and chairs for an event. That's going to show on the balance sheet. That's not going to show on this. So you can also say, where did our cash go? And that's another big question that the board's going to want to know. Last time we met, cash was at 50,000. Now it's at 20. Where did all that go? And that's what this statement will show you.
The cash flow.
The cash flow. Yep. The cash flow statement is supposed to reconcile your bottom line profit and show you exactly what activities you spent your money on. Maybe you move some of that money over into an investment account, and that's where some of that cash went. So I think probably the most important thing is the very last one. This is kind of from QuickBooks. It's the budget overview. It's the very last page, and I just printed this on a quarterly. Each quarter, and the nice thing, this is done in QuickBooks, and we're going to talk about different methods of keeping books, but each quarter, this is our budget. So at the board meeting as well, you should be saying, you should start the budgeting process. Let's say you're a calendar year end. You should start it like in October before your year end ends. This is the time where you get together where, let's say you have December 31st, 24, you should start budgeting October of 2024. And the way you put together a budget is you look at what happened in the whole year of 24 so far, what happened in 23. You should look at all your historical data to put together a reasonable budget. But you should also put in goals. If you collected 10,000 in individual donations, maybe you want to say, we want 15,000 in donations. You don't want to stay stagnant. You want to put in some growth goals in your budget. But a budget also shouldn't, once you draw up a budget, it shouldn't be static. You should be able to go in and modify your budget as the year goes along, because you'll never have good budget to actual numbers if you leave this budget. And let's say something, maybe you couldn't do a fundraising event that you thought you were going to do, but yet it's still in the budget. Your books are always going to look like you're not doing so well because you never took that out of the budget. So again, you want to keep updating this budget if things change, but this is your roadmap to say, this is where we're heading. You always want to know where you've been and where you're heading. So if you're not foreshadowing to the future, your organization is not going to grow. So it'll just, each meeting, I usually report like a budget to actual sheet. So if you do QuickBooks, you can say, here's where we're at actually, here's where our budget is, here's where we're short. And that's another action item you can give your board members. Hey, I think you're really good at getting in, who knows businesses that would like to contribute to our organization, and assign that to your board members. That's their, if we're real short on that, you can assign that to them and say, hey, maybe for the next meeting, you can come up with 2 businesses that want to contribute to our organization or something. I think action items, that was the other thing I was thinking of when you mentioned that. Giving board members action items for the next meeting is key, or else you're just going to keep meeting and keep having the same problems, and you're not giving anyone action items. So, and the ideal, like when after your board meeting, kind of do a recap and say, in wrap up here, I would like Darlene to bring to the next meeting 2 larger businesses that would like to sponsor one of our events. Or I want Jim to bring someone that would be interested in joining our board. So give your board members something that they have to accomplish before the next meeting. It holds people accountable. And actually, if I'm spending my time being at a board meeting, I want to do something. Yeah. You should be, but if I'm not assigned something, I may not be sprung into action. I may not be like saying, hey, I want to do this, because I don't really know what to do. Mm-hmm. So a lot of times if you're assigning that, people are more than helpful. Or you can say, hey, can you help plan our next event and put together a team. So, yep.
And I think it also should go the opposite direction, that once they are given those assignments, to be held accountable if they don't follow through within 2 to 3 times. I'm really saying 2. Because if your organization is truly functioning, you're always evolving and always rolling. So you don't have the time for people not to follow through on the things that they've been assigned to do, especially if you're doing events. So they're given those action items, but if they don't follow through after the second one, I think we need to discuss.
You have to come up with, do you get rid of that board member? I don't know what some of the consequences could be, but there should be some sort of consequences.
Change lanes or either.
Or put $50 in the contribution jar.
A cuss jar.
And when you start paying money, then you're like, oh, I gotta do these things. Exactly. You could say like a swear jar. You just say, you didn't do what you're supposed to do. You put $50 in for the organization. So on financial,
I was just gonna add, just holding them accountable, because if it was, say, twice and they failed to or neglected to do what they agreed to do, then you just say, hey, I don't know what happened, but this really affected our event or whatever, and so do you think this is something that you can do, or not? We would rather you just tell us up front if this is something that you're not going to be able to do, so you can be nice with it or whatever, and hopefully that board member would be forthcoming, and just tell you, well, you know what, ma'am, you're right. This is a real rough, time for me right now, so I'm gonna have to, take a step back if you don't mind. Maybe take 6 months off or something like that. Because sometimes they don't always be able to have that connect with you where they were able to tell you what was going on.
Right. And like with me, in tax season, I miss a couple board meetings. They know that, but I'm honest and I say, hey, I'll still give you the financials for the meeting. I'll still write up my little summary and I'll still provide you with that information, but I can do that from my office. I can't attend 2 board meetings because of, maybe March and April board meeting. And as long as the board member's honest with you and they still know the expectations, that's okay. Or they have family things going on, just be reasonable with them and say, hey, what's going on and how can we rectify this? So I think my last comment was, again, I was saying that a lot of events are being saturated. A lot of things with nonprofits, everybody's doing a golf outing. Everybody's doing, certain events. So you can get creative sometimes with how money is coming into the organization. Sometimes this doesn't equate to a lot, but think about things like things that you can do for free, like Amazon Smiles. You can put your organization, anytime someone orders from Amazon, you can put your organization out there and you get money sent to you monthly, quarterly. You just get a check, just royalties. Amazon Smiles it's called. You go onto Amazon, you set up your nonprofit organization. People can pick every time they order from Amazon, a certain percentage goes to your organization and you get a check in the mail. Kroger has it too. Kroger. So I know. Yeah, everybody has a program. Yeah. So just make sure you're looking out for those free programs. And again, some nonprofits, especially like chamber organizations and stuff, they do healthcare and they get a kickback from like Paramount. They do, but just get creative with some of that stuff and you can just have checks sent to you, and that's a nice thing. Yeah.
Yeah. And so for St. Paul's, they have a annual soiree that they've been doing right for the last 20 years. And so the regular donors, they know they normally go to, some venue and they'll have this dinner. And what it actually is connected the community and the clients that may have been serviced, during that period, they're able to tell how the agency helped them. So from where they were when they came into the agency and so where they are today. So kind of like give them a history of just the last year.
Oh, nice. Okay.
So that's what the people, got at that event. And so it was funny to me because they didn't ask for money at the event. At the close, there was this envelopes at each seating. And so when we closed, the CEO just said, if you were moved or touched or yada, 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 as you leave, you'll see an envelope. And as you leave, you can just drop, the envelope, at the door,
right,
as you feel fit, So, and that's where they get a large amount of their donations. So when COVID hit, they were not able to do that. So they took that and they did a soiree on social media.
Oh, okay.
And they actually generated more funding, believe it or not. So that was very interesting to see.
Yeah.
So.
That is, yeah. And you can do birthday campaigns. You can say, hey, instead of giving me a gift, send it to this organization that I'm involved with and things like that. So I see that all the time too. So, yeah. Any other questions, comments?
CPA in the house.
Yeah.
Hold on, there you go.
Yeah.
That's sound like a crazy question, but it just did come to my mind. So when they send the money on your behalf, if they gonna give it to you for your birthday,
yep.
But they give it to the organization, who get the tax right off, you or them?
They do. They do, yeah. So, right.
Darlene, we had a lot of questions. Oh, here we go. Were you going to talk any more regarding QuickBooks?
Oh, shoot. Yes, I was going to. Yeah, I am. Okay. I will. I didn't know how much time I had. If I'm going over, okay. No, I was. Thank you for reminding me. I had that in here, and then I just got away from my notes. So, record keeping, again, you have to make it a simple system, because as the board changes over, not everyone's going to be able to follow what the other treasurer did. So that's where I see a lot of times, like, let's say we do the 991 year and the books are all in QuickBooks and everything's great, but then a new treasurer comes in and they haven't been properly trained on QuickBooks. They revert back to giving us bank statements, giving us, things to do. So you have to have the system outlined at the beginning and what is going to be the easiest. If QuickBooks Online is, if people are, it's pretty intuitive, but you do have to have training on it. If you are not familiar with QuickBooks Online, you really have to have either that prior treasurer or you have to work with an accountant to train you on QuickBooks Online, how to get the information. You're going to see the best reports if you have some sort of accounting software. You can do things in Excel. If you're really savvy with Excel, you can put all the information in Excel as well. It's just, I think there's more room for human error if a formula is wrong, and it's hard to see your progress. So if you have it in a tax software like QuickBooks, you can see, how did I do last year at this same point in time versus how am I doing this year? Those are also important things to look at. So
is that something that your company train on?
Yep, we do QuickBooks trainings.
And how often do you do that?
I usually set them up like on a one-to-one basis. So anyone that calls, I can do a group training as well. I don't have a problem with that. I usually do it for people who have started a new nonprofit, a new business, and we'll just meet for like an hour and a half. We go through, we set up the system, and we kind of teach you how to get the information in there the most efficiently, and how, so that you spend the less time getting the information in there. So we meet for about an hour and a half, and then you play with the software on your own, and then maybe come back and we have like an hour follow-up saying, hey, these are my questions, these are what I don't understand, and we see how you're working and doing in that software. So more than an hour and a half, though, it gets to be, I see people looking at me like they're like, oh, too much information. So I think an hour and a half is about good to start getting, your feet wet and then being able to do it on your own. Yep.
How many times will we have to come to you for those hour classes, and how much would they be?
I do for for-profits, I do $75 an hour, but for nonprofits, I do $55 an hour for QuickBooks trainings. So, and like I say, usually the first session's about an hour and a half, and the next session's like an hour. If you needed another hour after that, I mean, we can schedule. It's just, or like I say, if it's a bunch of people that are interested, I could do a group session or something and have like a flat fee. I've not done that yet, but I can do something like that.
Okay, I need the slow learners package.
Okay, because some people don't like the group setting when they're trying to learn. So yeah.
I need the one-on-one. I can bring you some dinner.
I can do that.
Yeah, we're gonna be there a minute.
So yeah, but once you learn a few things in there on how to maneuver, it does come pretty naturally.
So would you say at least and I'm being serious, but yet a minimum of 4 visits with you, I should get it?
I'd say 2 or 3. I'd say 2 or 3. I mean, but again, everyone's different. So it could be only 2, it could be 3, it could be 4.
Okay.
So it just depends on how many questions you have.
Okay.
The nice thing about QuickBooks Online is once you set it up, you can send an accountant user an invite. And let's say you're working on it at home and you say, I just don't understand what I'm doing. I can jump in there on my end and we can be looking at the same information. So it doesn't always have to be where we're sitting together. I like that for the first training. But after that, if you're just having specific questions, you can send me a link and then I have it on my CPA account.
And then do we purchase the package to QuickBooks from you?
No, you just go on to, and again, I've set that up and helped people purchase the package, but you just go on to Intuit's website and purchase QuickBooks Online.
So we can do all that though with you on the first time.
Yeah.
We can purchase it online and all that.
Yep.
Okay.
Yep.
Okay.
Yep. I do $55 an hour for a nonprofit QuickBooks chains.
It says advanced $100.
No, you don't need the advance.
You don't need the advance. See,
You need the $15. You need the single start. You don't need that.
Yep. Either the simple start.
And if you go to TechSoup, you can usually get a nice TechSoup package, a QuickBooks package for way cheaper than that. Okay. And TechSoup stopped doing the like downloads. They do almost everything online now. Okay. And so TECH Soup, TechSoup. It is a nonprofit clearinghouse for software. You can get discounts on like Adobe. You can get discounts on Microsoft. Multi-Faith Council used to have a free license for Microsoft Office products. Nice. And now they shut that down though. But we gave a lot of people Microsoft Office for free because it was coming through TechSoup. So, but now they do it all virtual, so you don't get the downloads and stuff like that anymore. But yeah, you have to make an account on TechSoup. Yep. Mm-hmm. Yep.
And you say you can buy QuickBooks Online on there too? Yeah. Oh, nice. Yep. Nice. Question. Yeah.
Yeah, and I just was thinking about her, and she was talking about how many classes. Yeah. And I have taken the training, and one thing about that is it's really not that hard. Right. But you have to use it.
Yes.
So if you don't use it, that old saying, you lose it. Yeah. So once you get in there, you have to make sure you use it, because if you don't, it's gonna or have somebody make sure that have at least one person that can do it all the time.
Yep.
So you have to be committed to it.
Very true, because you will lose that information as soon as you learn it if you're not actively in there and doing it.
But you're saying do it weekly, so
yeah, I mean that
would be that time that you need to put in.
And I think what he's saying too is don't have a session with me. Wait a month to get back into that software to learn. You just make sure you're in there that week after, and make sure that you're doing that bookkeeping so you know how to work it. Don't wait a huge amount of time in between the training and when you get in it. Because I've had to redo trainings because people say, I'm sorry, I got busy. It's been 2 months since I've even been in there and I need to redo it.
Our finance committee will have to do that because we paid somebody, and I went in there the other day and there's nothing in there since the person set it up to do our taxes. So I'm like.
And with QuickBooks Online, be very careful. You can link your bank account. And it all sounds easy peasy, and it's great. I encourage you linking the bank account. But don't think you can just go in. It'll download all the transactions, but it's not 100%. It doesn't put it in the right categories. Right. You still have to be very diligent and say, you hear the commercials. It's like, oh, it's so easy. You link your bank account, you click add all these things, and it's great. No, you have to be looking at the information to make sure it's categorized properly.
That's what the person told us. Don't link the bank account at the beginning because that's going to stop you from practicing.
It's going to stop, And if you have like a Stripe system for credit card processing or a Square, and you're linking that and your bank, be careful. There's going to be duplication.
Yeah.
So you have to Stripe is like kind of like a Square. It's a credit card processing system for sales. Like if you're taking credit card payments, they charge you a fee. But if you're linking that, it's going to bring in those deposits, it's going to bring in your bank deposits, and it's going to be a mess. Mm-hmm. So those types of things are the things that when I do my training, I warn people on at the beginning, like, please, let's get this set up properly from the beginning, and then you can manage it from there. So
yeah, that just brought up another question. I was thinking about like your first training.
Yep.
Now, during that first hour and a half, like say like herself, would you help set up her accounts and the coding and all that stuff?
Yep.
So okay.
Yep. I at least, maybe we don't go through the whole chart of accounts, but I give like a good start to it. And then I, then you can create accounts on the fly as you go along, or if it doesn't work in certain categories. But we talk about, how do you want to set up your books? Do you want to set up, there's things like locations that you can say for events. So you can track your events separately and things like that. So there's a lot of different features. It depends on what you want to use. So we'll go through all that at the training too.
Oh, we're going to get to know each other well. To keep your books well, you have to do it weekly. Don't wait 2 weeks, a month. Do it every week. Pick a specific day out of the week and do it then. Because once you get behind, then you're trying to catch up and you're going to make a mistake.
And you forget where transactions came from. You'll be looking at your bank statement going, I don't know where what I spent money on, or this debit transaction, or So
as part of QuickBooks, entering the receipts that you have?
Yes. Entering the receipts from your either a credit card, your bank account, entering any checks you've paid, any deposits you receive in. It's your whole accounting system to generate these financial statements. Yep.
So everybody keeps saying that QuickBooks is like 80 to 85% of data entry.
Pretty much.
Yeah.
Okay. Then the rest of it is manipulating it to make the report.
Okay. And then once you get the data in there, if it's good data, then you can just generate the report. Yep. It's real easy to generate the reports for the board meeting. And you can set up favorite reports and just print those every time you have your board meeting.
Okay. Major question.
No. Just stand here like, oh, let's do it.
Since it's about receipts, is there any way to avoid the headache of, so like when you go and buy something at the store and you accidentally put something of your personal on the receipt?
Right.
You get ready to go put that receipt in QuickBooks and you realize, oh my goodness, the candy bar I bought is on this receipt for a transaction that I made for my women's ministry group.
Right.
Do I just put the whole receipt in, or can I justify by just taking the amount off? Because now the taxes is in there according to the whole receipt versus the 2 items that I bought for the women's ministry retreat.
Usually the best thing to do is put the whole receipt in there, because that's what's going to be reflected on your bank statement, and you won't reconcile at the end of the month if you don't put the whole receipt. Okay. And then you just pay that money back. So you just say, I'm going to put the whole receipt in there and I owe $5.30 back, and you put it back into the bank account. Yep.
Or I could just make sure I don't put that candy bar.
Oh, right. I mean, that's the best thing. That's the best.
Separate your accounts. That was a very valuable lesson Darlene taught me years ago. Separate your accounts.
Separate your accounts. It happens accidentally, and then you just reimburse back into the bank. So.
Because literally, okay,
I ain't taking the mic back.
I'm sorry. So mine is like my ministry, I have 3 leaves.
Okay.
And all of the leaves now are active. So I have women and men's ministry. I have youth mentoring, which is our after school program. And then I have food insecurity, where we feed the homeless.
Okay.
I literally could go to the store at Kroger's and be buying for all 3 events at one time. Because I don't want to go back and do separate transactions, if you will.
Right.
Because at the end of the day, some of the grants that we get support all 3 leads.
and you need to separate those when you're doing the grant.
Exactly. So
and you can do that at the accounting level.
The receipt I can separate. So if I go up to the counter and say, these 3 packs of water are for the women's conference. These 3 packs is for the after school program. These 3 packs is for packing the meals.
Right.
I can do that. But then like she was talking about the weekly thing, how do I show that on the receipt that it was for those 3 entities?
That's how you, that's
or does it matter?
Input. No, that's data input into the QuickBooks, into those 3 different sections. So that would be something I can show you that says, here's how you get that information into QuickBooks from your receipt. You always have to keep your receipts in case you're audited.
I do.
But yes. So and I can say, here's it, that's receipt is split into 3 categories when we enter it into QuickBooks. So you just need to know, and I think on a weekly basis, that's going to help you remember when we enter it into QuickBooks, we're going to have different accounts for those different activities. And you enter it in there like that. So you're going to have $100 to this one, $100 to this one, $100 to this one, and you spent $300. That's your like checks and balances. You're going to have ins and outs.
Okay.
So we can categorize that in QuickBooks.
And my last question is it true? Right. Because she's going to say something else good. Is it true that you can take the picture and then go to QuickBooks?
Yeah.
The receipt?
Yeah. Yeah, they have you can keep the receipt and you can scan it. You can take a picture and you can keep that within QuickBooks. I have people that put their bank statement, they do like a little attachment and they keep their bank statement in there. They keep their credit card statement in there. And that's just all within the QuickBooks system because your receipts fade after time.
Correct.
So that's the only thing. So you really almost have to do that because after a couple of years, you're not even gonna be able to see them anymore. Right. So there should be some sort of method where you're either scanning them into QuickBooks or some other system. Yep.
And I was just going to suggest too, a lot of times if you take the time on the front end, it's going to save you a whole lot of time on the back end. So I don't care who behind you in line, they have to wait. If you want to take your card and you take your time and put whatever you need up here for this leaf, let them cash that out, and then you put this up for the second leaf, and then put this up for the third leaf. So you got 3 separate receipts. So now everything is already divided up like you need it. They may be upset, but you have a right to take your time. And that's what I would do.
When I know that I've had to do that, especially now with this new grant that we got from the commissioner's office, I need to categorize that stuff. Yep. And so I told the lady that was behind me, baby, I'm gonna be a minute. Do you want to stay or I see she got like 10, 12 items. I said, I don't mind if you go in front of me, but I need to take this time. And then I share with her because I'm feeding the homeless. And she goes, oh, that's okay. And sometimes those conversations has literally got me a donation in the line. I've had people give me
Janae's a talker.
$20. I mean, one man pays for
the whole bill.
Wow. Yeah. Oh, that's cool. Yeah, that's nice. Yeah. Pay it forward. Nice.
Any other questions?
Y'all hungry?
Darlene? You got one more? Yes, hold on. One more.
With your budget, you were saying how, for you to be a little flexible or whatever. So how fluid can you be? Little or much?
I guess it just depends on your organization. I mean, you want your budget to be realistic because when it's unobtainable, then people are going to get discouraged as well because you're always going to be reporting every time you meet, oh, we didn't make our budget. We didn't make our budget. So you want it to be challenging, but you don't want it to be not obtainable. And you also don't want it to be too low because then no one's going to aspire to make it higher. So I guess it just depends on, and what changes within the year. Maybe you budgeted for payroll and then you've added 3 new people. So you have to always modify.
And that's where it was because we had a budget for payroll, but then we had to do increases because we wasn't getting new hires in. because the rate was too low, so we had to increase. So you had to increase.
So you would definitely want to tweak the budget, because if you don't, every time you pull an actual, it's going to look like you're. And again, that's discouraging. Yeah. So right.
So when do you know that you've actually met your budget?
When you're looking at your actual figures. So when you're set up in QuickBooks, and you can put the budget right in QuickBooks, you can compare it side by side with the actual, and it'll say dollar for dollar where you're off. It'll give you a range of, this is the budget, $500, you're at $400, you've got $100 to go. Those things are in QuickBooks, those reports. So it's always going to tell you how far behind you are with the budget or how ahead you are of the budget.
It's a lot of input.
It's a lot of input to get there, but it's spending the time.
So whenever you do a financial statement, it's something I talk about all the time. Again, nonprofits are a business. So if it's a business and you don't know what your numbers look like, or you didn't forecast numbers, you're just going to get the numbers that come because you're not even planning for no numbers.
Right.
So if you do your budget for the year, that goes in QuickBooks. Then every month you putting the categories in for what you're spending. They go directly to the budget. And it'll tell you in QuickBooks, this is what you said was the budget in October. And this is where you are January, February, March, April, May, because you do your budget early, right?
Yep.
If you do your budget October, the fourth quarter, do your budget. Everybody get all the stuff in there. This is our budget. We get it finalized and approved by the board. Now, January, February, March, April, May, June, all the way to December, we study putting in documents, study putting in all the stuff. Every month, you should get it's probably not an aging report, but it is looking at where I am today versus where I said I was going to be and where I was this time last year. Because if I don't know if I'm doing better or worse, you're not in business. You're still guessing.
Right.
You have to know, how did I do last year in this space? How did I do against what I said I was going to do in October, and what's actually going on right now? That's
and
what
also,
you want to know.
A lot of times when you're applying for grants, and Crystal knows this, they want projections into the future of over the next 3 years, where are you going to be? Yeah. That's where your budgeting comes into play. Yeah.
Right.
Yeah. So, yeah.
I have a quick question. So when you're doing at the end of the year and you are doing your actual budget, how much off can you be without it being an issue? Is it a penny? Is it 5 cents? Is it, you know what I mean?
Well, so I guess when you get to the bottom line for a nonprofit, I was going to say that normally you want a balanced budget. And that means that your expenses don't exceed your revenue coming in. That's the best scenario.
Okay.
It's not really a dollar figure. It's more, you don't want more expenses than you have income. You want either a little bit of cushion down there, or, spend some more money, or come up with, if let's say you're short, let's say we usually start, when we do budgeting, we start with our expenses. What are our fixed expenses? What do we have to pay for this nonprofit? That has to all be in there. What do we have to pay for events? You get that figure, then you know where you set your revenue. Okay. So your revenue needs to balance that out or exceed it so that your organization grows.
Okay.
So that's usually the best way to start for people, is don't try to project the income first thing, maybe. Right. Look at all your fixed costs. What do you have? What do you absolutely have to run the organization? All right. That's usually an easier start. Yeah. All right.
About Darlene and the Money Habitudes. Good info? Good info? Okay. No. So, CJ, what was your big one? How many people had planning as their number one money habitude? Pretty much everybody in here? Huh? Use that? Yeah. No, you can't reuse that link, but it is some other links. Yes, it's on. Yep, it's in the Okay. So you got to go to moneyhabitudes.com. Take a picture of this. Okay. I ain't got that many of them though, so I have links like here. I only got 15 accounts in here, so I will use 4 today. So that's gonna go away very quickly. So don't just be spreading that out willy nilly to people. Oh, no. You know, yes, you want to do yours. Yes, you want to do the real ones online. Yep. You want to do it so you can get that. Yep. Okay. All right, Darlene has some great info. We got that. We know about our habits and attitudes towards money. So we're going to do a little work at this point. And so you got some information on budget planning. But we're going to go back to Charitable University. I know a lot of people finished Charitable University, but there's a lot of people who didn't do the finance part. And this is the budgeting section. So we're going to go through my financing part so you'll see what it is and we can ask questions. We can, I already had it open, didn't I? You see Charitable University. Oh, that charity registration thing is right here. So those, yep, to be done by the 15th. I want to go to the charitable. Yep, it should have if you're in the system. Now, every organization that's in Charitable University should get an email about the registration piece. Yes. Oh, pass the mic. Sorry. Somebody that, whoever knew, Brenda signed up for an account. I think, Charles, you already need up. So, yep, definitely. Somebody should be able to do that. Now, being that y'all a church, y'all might actually not use it. I don't know. I say y'all, I mean us, but I don't know if they do these registrations. CJ, do y'all do these? You know? Okay. But if you have a, right. For not doing those? If they don't know about you, it's not. But if they know about you, they can come back. Yep, they can come back. So this is my charitable registration. And we're going to go back and do basic budgeting. It's only 20 minutes long for the whole thing. I already completed it, but I'm just going to open it back up. I don't want to open up the certification. I want to open up the thing. I see I opened up a second one. I don't know why I did that. That was wrong. All right, so basic budgeting and accounting issues for charities has 2 modules, basic budgeting and then a course survey, which the course survey is just a test. So we're just going to watch this, but we could stop it and answer questions because today we want to do a little practice run on creating a budget. So you think about what your organization has and what you're doing. It's a bogus budget. It's not like, oh, I don't got all my stuff, I can't figure it out. But one thing you heard Darlene say is you always start with the expenses. So in Maumee Bay, when we had our big big event, it was like, what should the ticket price be? We can't set the ticket price till we know how much everything costs. I can't set my overage when I don't even know how much bills I gotta pay. So it's kind of the same thing with the budget, right? You look at all your expenses, and she gave you kind of a way to do that, and you'll see that on these sheets and some of these other things as well. When we get ready to look at how we can do a budget, what are your fixed costs? What do we know one fixed cost should be from last week? Insurance. Okay. If you don't have the right insurance coverage, and you heard him say that one of his organizations, their full insurance was $6,000 a year for all the things that he said they should have. This sounds is good. I'm so sorry I'm a chew. $1,000 a year for insurance. Yep. Right. Yeah. True. Better to spend that there instead of spending $75,000 because somebody baby broke their ankle at your event. I went to the hospital and then had therapy. And then went to chiropractor. Then got a cold, but they said it was because of the ankle. And they put you back in the hospital, right? Mm-hmm. Yeah. It's a suing cover. Yeah, it's a suing country. So we're going to look at this basic budgeting and accounting for charities, even though I completed it. I also wanted to show you guys this because you can always go back into Charitable University and rewatch your stuff. So, if you did this already, but your finance committee did not participate, open it back up during one of your training sessions. We talked about those board meetings. You cannot have a training session during a board meeting. That is a separate meeting. The board meeting talks about the business of the organization, and then y'all schedule a training. The only thing you're doing at the training is training. We're like, well, we're going to spend 15 minutes and go through this. Ain't nobody going to learn nothing. Ain't nobody gonna learn nothing because we came here for something different. So, okay, let's watch it. Green light is on. My bad. I'm just talking. Sorry, people online. Oh, yeah, because I sat it over there and then I went back and sat down. That's what I get for eating. My apologies. She said something very key on the video. If you people online that's watching this later didn't hear the video, go to Charitable University and sign in and do the budgeting piece that we asked y'all to do. Next. So, fundraising expenses are not program expenses. So if you're doing one event that is a fundraiser, you can still be doing education and training or whatever, but if y'all call that event a fundraiser, all of the expenses to make that money go in a fundraising budget, not in a program budget. So because on charitable registration, they ask you how much did you spend on fundraising. So if you're saying that you collected $20,000 from Ohioans every year, how much did you spend to collect that money? What do the postage look like? How many social media things did you have to pay for to boost to get those things? That's a fundraising expense. So we create these penny ante budgets because we're not used to budgeting and we don't think a nonprofit is a business. But then when we get to the tax side of it, we're screwed because we didn't even categorize the funds right. So if you're going to spend some money on something, spend some money on a professional to help you do your budgeting piece and to help you do your finances. Because if you go into business without a plan, you're just having a very high value hobby and it's likely not going to last. Are you running your business as a club, your nonprofit as a club, like we just, get together every now and again? Or is it a business? If it's a business, as we have learned here, all nonprofits are businesses. You have business and fiduciary requirements. Your name is at the IRS for being in charge of this. The state of Ohio got paperwork on you saying you operate in the state. But then we come to the finances. We want to go back to our thing and be a carefree. We don't want to be a planner or a security. The sustainability of your organization requires prudent people to manage the money. And when we don't know what we don't know, and then we don't show up when it's time to learn them, then our organizations suffer in the long run. And where do they suffer? In our community. Because you can't get no more money from the city when you didn't do your grant management right. This week is about the budgeting side. Next week is the grant side. So we have a grant person here next week. So we getting all down on the inside with the grants next week. Okay. So how many people review their bylaws regularly or have a copy of the bylaws at the board meeting? You see, said we got bylaws? You on the board? If you're on the board and haven't seen the bylaws and didn't get that when you were onboarded, right? When you bring new people on the board, they should be onboarded with a packet of information that has all of the documents regarding this organization. Some people put minutes from the previous year. There's all the forms, confidentiality statements, the statements of like I agree to be on the board, and the conflict of interest statements, all of those things, a copy of the bylaws. If you don't get all of that when you join the board, you are probably going to get in trouble at some point because they don't keep their stuff right. So we here, we learning, we know where we are, but we have a new board president here, and so now that's something to address if it had not been done in the past. You're not operating as a business, you're operating as a club. That is not a club because y'all are liable, right? She said that you cannot do your budget during the year. You have to have your budget approved before the year starts. So Maumee Bay might be in trouble because we do our budget. Oh no, our year starts July 1. We're July 1 to June 30. That means our May meeting needs to have a budget in it. The planning not until the summer, but the budget got to be before that. Go ahead, you got Where's that other mic at?
Just a quick question. You said that so there's a standard date or time frame for setting budgets for all nonprofits.
You should do it
universal.
Yep, you should. Well, you should do it before your planning. Your year starts. So like Maumee Bay is July 1 to June 30. And we usually take off the summer, but now we have summer activities. So that's why we typically didn't do that stuff until August, because our club year was starting in August, but really our financial year starts July 1. So if you're on a calendar year, most people are January 1 to 12/31. Okay. So the fourth quarter is when you do all of your planning. You cannot plan when y'all actively doing work. So I like to talk to my clients about doing 3 quarters. It's a year and a quarter. Quarter 1, run full steam from the plans that you set in quarter 4 of last year. Quarter 2, run full steam and assess what happened in quarter 1. Quarter 3, look back over the last 2 quarters and see what you need to fix, adjust those things. Quarter 4, lower all activities and focus on planning and fixing things from last year, so that when January starts or quarter 1 the next year starts, everybody knows what's going on and we're all running in that direction. People don't do that. They'll be like, oh, our program year starts on January the 1st, but we're going to have a training session in May. So y'all just going to flounder around from January to May because you don't think you're doing nothing. Well, maybe that's why y'all don't have no money, because when you're not working, you should be out here raising funds. But you're not thinking about none of that because you don't even do your planning until 4 years into the month. And now we got to go. We got to run. We got to do all this stuff. And we're trying to build a plane while we're flying the plane. Ask people how that works. We have no engine. We're not getting off the ground. We got an engine, but the wing flaps don't go up. We crash into the ground. We got no tires, but we coming in for a great landing, but we hit the ground really hard. If you don't plan, you're not ready. Mm-hmm. So you can't say we gonna have enough money this year when you didn't look at last year's budget. You didn't plan for this year's budget, and y'all already spending money because somebody told you got $30 in the bank. I'm sorry. We got enough for this. Is that how you do business? No, it's not. So yes, if these conversations are regularly occurring, if your finance committee is not regularly meeting, you're not doing business. You are managing a club. And finance teams need to be diligent about meeting, about making sure that everybody is aware of what the financial records look like, and also about due diligence. If it's only 2 people managing and don't nobody else know what's going on, and they steal from you, that's your fault. There's no way the president should be running the bank account. That's out of order. Completely out of order. The president should not manage the bank account. The president manages the meetings and the movement of the board. The president does not vote even in the board. They just manage they set agenda, set policy. They say, hey, I need this. We're going out to get some money. We're going to do this. They might manage the programs or get staff in, but they're not doing all that stuff. The treasurer and the finance team should have 2 signers on every check. If you only got a 1-signer check process, I can write checks all day because y'all ain't even going to ask me what the checkbook look like. We looking at checks from 7 months ago. If I wanted to take all of the money out of the bank, you would not know about it until 7 months after I took it because you don't have a meeting regularly, and I'm the only person that gets to sign the check.
I'm going to go back to a previous class we had. Remember the question was saying, what if it's only 2 of us?
If it's only 2 of y'all, you're a club. You're not running a business. You don't have any checks and balances. The whole board should see. We had a question in Maumee Bay. Why do we have to see the whole financial record? Because we're in business together, and y'all would never come back and say we did something crazy with y'all money. And I know you don't read the minutes. I know you don't read the reports. We put a full report together. But what you would never say is, we didn't get a report on this rundown of the money in our May meeting. You a lie. You a lie. And I'm not going to send out the packet until I have the financials, because that's the business side. All the other thing is great, but I want to get to the bottom line, which is how are we spending this money? So yeah, you need a team. I keep saying this. Nonprofits that have one board with 3 members and only 2 people do everything are not in business. You need a full board, and they need to be trained and working. If they are not trained and or working, you could start there, but that should not be your standard mode of operation. If you 2 years down the line and you got them same 3 people and you still doing all the stuff yourself, you are a club. You just doing hobby stuff because you cannot be in charge of all of those things. If you don't have controls, like we got a bank card, but I can just spend money willy-nilly, but somebody got to get an alert that says, hey, somebody's trying to spend money. So all the organizations I work with, Maumee Bay included, when we spend, I have a bank card as the president, I'm running these grants, I got to go to the store. Linda be like, Crystal, did you just do this? I'd be like, yep. She said, okay, I'm going to approve it. Because we set it up at the bank. Anytime that card swipe, she as the treasurer gets a thing, or the financial secretary gets a thing on her phone that says, somebody just used your credit card. If you don't have that set up, problems. So it can't be you and also you. I got the checkbook, I got the card, and I got the account, and I can do all the stuff. No. That's not right. That's not right. So we can start there, but when we know better, we do better.
That's almost like check and balance.
Yes, it's flat out checks and balances, which is due diligence for any business, prudent person. That's where they get you when you go to the IRS, when you go to court. Did y'all operate as a prudent person? A prudent person running a business would never say you can do all the money by yourself and we all come to the meeting and just agree with what you're doing. That's not prudent in business. All right.
Report.
This one is too in detail for a new organization. They got monthly projections, yearly projections. This is after you've been in the game for a couple of years. So that sounds good, but that's a very difficult thing to just come out the gate doing 4 columns, a 6-column budget, I mean. If you can do a 1-column budget with your budget for the year, another column for your monthly expenses, and then another column for your change over time, like what it looked like last year versus this time, usually that's going to be cool. But as you build up that stuff in QuickBooks, you will have all of this information. It'll just flow all by itself because it's going to be calculated. It'll say last year in October, you spent $375. This year, you spent $5,000. What happened? Mm-hmm.
Yeah, what I see too, Sister Crystal, is that when you have these structures in place, you're really building for success, and you position yourself for growth.
Yeah.
And growth won't be a negative impact on you because you structured for growth.
Absolutely.
You don't wait till you get there and then now you're scrambling trying to build a structure to fit what's there. You build for that structure to be able to grow. Because
you have the info, right? Yeah. The info could be there, but if ain't nobody data mining it or sharing it or talking about it or having a meeting period, then you just collecting data. For what? I might as well not collect the data. We ain't using it. Right? We got all this data. We trying to figure out why things ain't moving forward. How about you read the data and make a decision based off of the data on a regular basis in a platform that works well, and then share it with all the stakeholders. That's really the thing about the difference between that nonprofit piece and an LLC. A LLC, you ain't got to share nothing with nobody. That's your business and your name, and you can do all the stuff. No problem. But you are a publicly funded institution when you take up a nonprofit, a 501c3, anything that's in the 501 area. That's public record. That's a whole different level of business. Like Janae asked, I know an organization that is collecting money, and I know they got rescinded. If she make a call to the IRS right now, everybody that's on that paperwork for the IRS getting a letter. Every single one. What y'all doing with the money? We got an announcement that y'all collecting money. Who collected the money? We don't know. We ain't been in operation in forever. What sucks to be you because your name is on this document that came to the IRS. And when I pulled it up on the state, it looked like this. This the person that signed those forms. You're liable. You're liable. Where's your bylaws? Where's it where you had if you're not the president no more, show me the elections and who's the new president. Because if you haven't had any elections and you can't prove it and it's not in your notes or your minutes, then I'm coming for you. I'm coming for you.
You the last one on.
You the end of the buck stops here. Right?
Wow.
So we doing a lot of things like we play business, right? We playing the game until somebody get hurt or some get stole or you know what I mean, something like that. Now we crying like, oh, I had no idea. I didn't never really do nothing. Well, what you did do is give your name and address, and they put it on that paper. So you in trouble. Everybody on the paper as that's an officer, listed as an officer.
Compare the charity's budget projections for
October. All right, that was Charitable University.
That's good.
I think so. I think it's good info. Okay, here we go. Okay. Darlene talked about some of this already in her part, so we don't have to go over duty of care, duty of loyalty, duty of obedience, right? That you are responsible for managing this organization, not as if it's your personal organization. Everybody get copies of these, but as if you are overseeing this public work, right? So, awareness of activities in the community, participating in decisions, welfare and operations, loyalty. This is the one at all times choosing the best interest of the organization. Not, ooh, if I sell y'all this, then y'all can pay me to do this. Now that can happen, right? If you have a service, you can do that, but your board, your bylaws should be able to say, we don't give credence to our people first on the inside. It can say we'll get 3 estimates and go with the best estimate, or we will recuse you. Like you can't be on the board and vote for them to pay you some money.
Right.
You would be surprised how much it happens because most people don't have a full board. So they're like, well, I'm just gonna do this, and y'all gonna have to pay me back for XYZ. No. You're not here to make money. In a charity space, you're volunteering. Now, if you either gonna be a contractor or you're gonna be on the board as a board member. Now, some boards have where the board chair becomes the CEO, and then they also manage that. That's a whole different level. At the grassroots level, it shouldn't be nobody doing that. Y'all just get new in the board space, right? Now, if you want to have a president CEO, meaning I want to get paid and I want to manage the whole thing, then get an LLC. You can do that all day long. But if your board says that's okay, make sure you got an attorney. Make sure you got an attorney and make sure you're not doing nothing that's illegal. Because you got to report all that. You can't pay yourself $175,000 salary when y'all got $178,000 in your budget. How you get all the money except for $2,000?
Yeah.
And y'all did one program. I'm sorry, right? But people do it all the time because there's no checks and balances, right? That checks and balances piece. If you in a rough spot, you could be a very nice person, but your granny about to go in here and you can't give up the house for nursing home and we gonna lose the house and I gotta find a way to pay my granny, but I know I got this checkbook. It's not that people are bad. They just find themselves in bad situations. People don't necessarily, let's be very clear, some people are inherently bad. So you can also bring a bum on your board and he sound great or she sound great and it just goes sideways from there because ain't nobody checking. They looking around going, it ain't no meetings. Don't nobody know who got the checkbook. I'll be the treasurer. I'll be the treasurer. My granny's debt is paid, right? That it can happen. So be very leery of that.
So I understand that if you're on the board, you can't get paid for services. But
you can.
Wait a minute, let me finish. So okay, so I hear you.
You get.
So like Darlene, who sits on the board, who volunteer her services, do she or can she claim that? So that's just truly volunteer.
It's truly volunteer. Okay. You can only claim money that you gave to an organization, not time.
Okay.
You can't claim time. Okay. You could claim, like if I bought hair care products and I got a receipt, that's a charitable donation.
Okay.
But me driving to the store to go get the stuff, that's my time. I can't say, and you got to pay me for my mileage and my time, which I value at $35 an hour. So now I'm going to put on my IRS form that I spent $50 in hair care products, $35 in time, and mileage. You can't do that. It's only the money.
Okay.
Yeah. But you can pay board members for certain things. It's just your record keeping. Mm-hmm. And what do you have in your bylaws to address that? And was that person excused out of the room while the rest of the board voted on how much we was going to pay? What was the service for? Who's going to manage that work? Who's going to be responsible to make sure that person gets paid? You got to have all of those conversations, and they must be documented in your minutes. Because I could call right now and ask you to see all of Pooh's minutes, and you got 45 days to get them to me because you're a public entity. Out of 45 days, I can go right to the IRS. I asked, and they'll be like, okay, we'll ask too. You are a nonprofit organization, publicly supported charity. If Crystal Taylor, a private citizen, calls the United Way and says, open your books, I want to see where you spent all of that money that you collected from Job and Family Services and every other entity, they have about 45 days to get that information to me. I should be easily available online. Now, what they can say is, we don't have that paperwork done, but you can see our last year one. That's on Charity Navigator. You can find anybody's nonprofit information anywhere online on the IRS website. Now, the only thing is, if you're doing that postcard, it just say you have less than $25,000 or $50,000. That's the only thing they'll know about you. But that's what you got. That's what we got. We had less than $50,000. That's what we have. They can say, where's the rest of the books? They can still ask you. You got about 45 days. You got to turn it over. It's the purpose of being public, right? It's public because the grantors are public. That's public dollars that you're getting to spend. Then this duty of obedience is complying with all of those laws. We can't be ignorant and say we didn't know the law, so we didn't comply. Who does business like that? Well, sorry, I didn't know. Well, you going to learn today, you going to pay. Right? And you going to pay. Right? So those duties in the financial space are massive. But again, it's not a business to us. We just doing some extra stuff. We like doing these things in the summer. So we just come alongside y'all, help y'all in the summer. And you know what I'm saying? Now we all stuck. So it's a lot of info on these. Practical ways you can look at duty of care, the board being competent, budget approval. You'll see a lot of financial things here. Key financial policies. Who got financial policies? Who could pay for stuff? Who gets the bank card? Who check on the bank card? Who does the financial recording? All of those are policies. If they're not there, you're not in compliance with duty of care because you just letting somebody do it. Cash reserves in a conservative, responsible way. Here's the thing. These one companies told us that it's an online CD rate of 5.75%. We're going to go with the 5.75%, but instead of going to Huntington, we're going to go investhere.com. Investhere.com got 75,000 of our dollars and guaranteed us 5.75%. But when we call to ask for our check, the number don't work no more. Or we can't talk to a human because we went with a sketchy online bank that gave us a 0.75% more than Huntington that's down the street that I can walk in and go to jail on when you don't give me my ding dang money. Right? Yo, I'm going to jail. You took my 75 plus 5.75 honey. It's going to be bad in here today. Like, get the manager. You're going to be mad at me because I'm mad at you. Right? But we chose as a board to go with investhere.com and all our money is gone. All our money is gone. Duty of care. Right? Yeah. Advising the management team on investing in all the duty of care is all money. All money. Who's in charge of your money? If it's one person, you're not in duty of care. You need a team. Get a financial committee tomorrow. If you don't have one today, put that on the next board agenda. If you need to call an emergency board meeting because you only meet quarterly, Call an emergency board meeting. Start talking to people that you have met in these other areas and say, I need a finance committee. I just need somebody. You could do your personal internal audit by saying, just look over our books. Is this something you see that look weird? Yeah, who keep on taking this money out over here? Because you ain't never looked at this, I can tell, unless that's you taking this money out. Yeah, here's 7 questions I have right off the bat, just looking at the thing, right? Find a way to do that. And you have a team of people to do that. Duty of loyalty. Legal and ethical integrity. Legal integrity. Who's in charge of getting the May 15th document done? Who's in charge of pushing the button on the 990, even if it is just a postcard? Because when it's not done, you don't do it for 3 years. You don't have no IRS no more. You don't want to do that because it take an arm and a leg and some cash to get it back. Real as many months, huh? Many months. Maintaining confidentiality with private information. Evaluating the mission and purpose. Advocate on behalf of the organization. This is duty of loyalty. Do y'all need to change your mission? Do you have a mission? All right. What do everybody say y'all here doing? Because some of us think we here feeding little kids, and other people think we having fundraisers for dance parties. It's a dance club for me. We all doing something different. What's your mission, and can they say it? Obedience. Providing oversight to ensure management is not conducting any activities that are unlawful. We don't have management because it's one person doing everything. You the board and the manager. So how can you check yourself? You cannot. You cannot. You can get a CPA and have them look over your books, but you still need a team. The treasurer should be doing that. And the treasurer and the president should not be related in any way. They should not work at the same location. They should not be family related. They should not be former in-laws. That's a relationship that is going to get you in trouble later. If I'm in charge and my boo run the money, or my little brother, or my cousin, or right? Prison from the people that gave you the funds. Let them see it on paper. Create a whistleblower policy. That's for a big one. We don't got employees, but I do think whistleblower things are important to at least give yourself an opportunity to say, if y'all have a problem here and you have it with me, talk to them. If you have a problem with anybody else, talk to me. But if it's about me, go see them so that they can get it cleared up. As the president, I would never say I'm the end of the line. It's always somebody hired. The IRS is higher than me in Maumee Bay, right? We got a whole board of people. Say something over there. I like on my agendas around the horn. That always goes on every agenda. Around the horn. You got an opportunity to say what you need to say right now in this meeting. If you leave up out of here and talk about it over there and you didn't address it on the record, that's on you, boo. You can say whatever you need to say here. That's open time. I do manage the meeting, but that's free time. Everybody can say what they want in the time we got left until it's time to go. No, I'm just joking. No, right. Speed it up. No. You give people ample time, right? That is a key portion. When you shut down a meeting early and table a whole bunch of things, never table around the horn. Ever. Wow. Never tell people in a meeting you only need to hear from me and I don't really give a crap what you got to say. Never do that. Never do that. Because I'm not coming back. I waited for 2 hours for you to shut up talking and then you tabled it so I couldn't say what I had to say today. Okay. I'm out. Understand and participate in compliance. Support and evaluate the CEO if there is. For most nonprofits, the board should be supporting and evaluating the work of the person who's doing most of the work. The 360 evaluation on a board is critical. Tell me how I did. I'm going to tell you how I think I did. Let's have a discussion about what could be better on the next rotation. Mike. Janae, right behind you. Oh, snap.
Okay, there we go.
Is it red or is it green?
It's green.
Okay.
I think that is a major critical part that we as chocolate people, we really need to work hard at making our organizations feasible to have the hard conversations in.
Yeah.
We don't do well at that. Yes, I am the CEO and founder of New Leaf Group, but if you see something going on crazy out in these streets regarding NLG, and you think it need to be tweaked, you at least ought to come to say that to me, so I can continue to make the community look better.
Right.
Because at the end of the day, I'm connected to a whole lot of people.
Right.
So when I look bad, you consequently look bad too, because they know we know each other.
Yep.
Some people are supporting you because of me.
Yeah.
And vice versa. If we're not willing to have the hard conversations about how we're doing, how we're running our businesses, and affecting the community, I think we're doing a disservice to ourselves.
Well, we're definitely doing a disservice to the community.
Nonprofits.
Yes, and to the community, because we put now halfway work.
Correct.
Right.
So, within your boards, I think you ought to ask, because I'm always asking the community, what do y'all think about what we've been doing?
Yeah. People don't ask questions they don't want to know the answers to.
Because the community is the one that's really supporting us doing what we're doing.
That's right. It's particularly in your case because y'all very public with the request.
Very public.
And you can see the whole lineup. Everybody online can see who gave you something for whatever. I'm sending it today. You know what I'm saying? All of that kind of stuff. Those things are key. Even if you don't have a very public, forward-facing fundraising scheme, at the end of the day, you need to ask people or either provide them with an annual report of what you did with their money. Right? How can you do that?
And my thing to that is I get irritated with some of our people that constantly, and it's like I keep repeating myself when they ask me, why you posting all the pictures? You did hot dogs this time last year. You did, because of people giving their hard-earned money. They need to know where their dollars went for that month.
Yeah.
If you can tell, I fix a different meal every month. So what pictures are you looking at? You still stuck on the hot dog? I done fixed the meatball sandwiches and chicken noodle soup and veggie soup. I done fixed all this since then.
And the numbers and the people, right? And who said what? Who said thank you, right?
Pictures of who rode and who drove, who packed. People want to see who's touching their money as well.
As you go farther, as you got this city council money. This your first time getting city council money. They're gonna ask you for a report at the end. So you're gonna take those pictures and turn it into a written document.
Yes.
And then you're going to create a regular annual report. It's something to grow to, right?
Well, we actually have to do two.
Yes.
We have to do one.
That's a grant report. Yep, that's the grant report.
We have to do another
the final one. Yep, that's the final report. Yeah. But you should take all of those reports from all of those dollars and turn them into a this is the year that was. Every year, you should have an annual report that says in 2023, we served 755 homeless, 400 kids, 675 XYZs. We spent $35,000 on meals. 85% of that was donated from the community. The other percent we raised by selling tickets. You should be able to give a full accounting. That's what the charitable registration is asking you. How much did you collect from Ohioans in 2022? You can't tell me that answer, then you're not managing your money right.
Correct.
That's the issue. But again, it's things to learn, right? See this tip down here? Conflict of interest statements from each board members every year. Every year, we should sign a conflict of interest statement that says, I am not trying to make money off of y'all, and y'all not trying to make money off of me, and I'm not, if I do anything that look inappropriate, I'm going to let y'all know first, right? That's a document we need to do. That's a document every officer and every organization that is on your board needs to do every single year.
Do you have one of those?
I have many. Yep, I'll send one out when I send the packet. I didn't get it printed out this time, but I do have I have a whole board onboarding packet. It's a part of, that's what we do, right? When we go out with our clients. No, Mike.
Just in reference to. So my question is just in reference to the conflict of interest statement. I'm not sure because I don't have ours on hand, but is it quite possible we have a time period on those, like for like the length of the board members? Like I think mine is either 3 or 5 years.
You should do one every year.
Still do.
Yep, you should do it. Yep, because this is the Ohio thing saying an annual basis. I have until I've seen that too. This is not the Ohio one, but it should be annual. Okay. That is true. Okay. It should be annual, even if you're not changing the board member. It should be one for this year. Yeah. So you're saying they should sign a new one every year. Mm-hmm. Okay. Like if you had an NDA, the Non-Disclosure Act, and you had a contract, you was doing business with somebody, if they continued your contract, they would give you another NDA. Yeah. Financial oversight, budget development and review. You can't really see the little words up there. Financial policy creation, reviewing financial performance, assuring and ensuring financial stability. That's like, I'm not waiting on them to do a fundraiser. We keep on telling them we need some more money. You must ensure financial stability. I do that by writing grants for Maumee Bay. I'm ensuring I'm not going to ever say, we're just going to wait to see if we get 22 new people to pay dues. That's not financial stability. We can't do any programs with that little bit of money. We scrambling around and we pissing all of our members off. So I ensure financial stability by finding programs that I want to do, not because I do these in my business. They're easy for me to do. This is low effort for me. I know a lot of people that can come in and share all this information with groups they never had access to before. So I find some money, I write the application, I put a few people together, and then here's money for the org. This is my free work. Everybody else will pay big money for these things because I do them for boards all the time and for businesses. But here in this space, this is my free work. That's how can you ensure financial stability in your organization? What service do you have that you could provide to your population that you could turn into money? That's part of the budgeting process. If you look at your financial performance and see that y'all was short $3,000 last year because nobody came to the fundraiser thing or nobody came and bought snacks, maybe you make a mean peach cobbler. You gonna sell specialized peach cobblers at the football games from here on out. That's ensuring financial stability. These are $5 a piece, and I plan to sell 50 of them at every single one. Count it up. See, do I replace that thing? Don't tell me I didn't support this organization, right? Ensuring compliance and adhering to financial regulations. You can't do all this stuff and then be raggedy with the paperwork. And if you can't manage the paperwork and doing all that other stuff, you need a team, which I said at the beginning. If you cannot do it, you need a team. You need a team. And then assess and manage risk. Where is the risk? I have a one-signer checking process. That's a risk. Manage it. We need a 2-signer check account. We need to go to the bank and tell them tomorrow we need another set of checkbooks that has 2 signers on it. If we can't get 2 people, don't write the money. Don't write the money. Internal controls. This is the finance. Look at this. In addition to the board treasurer serving as your checks and balances, we suggest some more steps. Use someone other than the accountant for bank deposits and payroll processing. For example, if you hire a CPA, they just do the books. They don't move the money. But some people be like, oh, write me 5 checks. I'm going to come and pick them up tomorrow because they don't got no other people on their team. That's not her job. The CPA's job is to organize. If you get them for bookkeeping, right? They could train you, or they could do your tax return, or they could be the bookkeeper. That's a monthly rate, right? And she'll look at what you got rolling through your account as to how much she's going to charge on that monthly basis to do your bookkeeping. You don't have to have somebody on your team that do it, but you're going to have to have some money to pay somebody if you don't have nobody on your team.
Now, all of those things, all of those things that you just mentioned, can that be written into a grant?
No, because that's organization, that's operations. Operations, you get usually it's like a 10%. You can say that you're going to get a CPA just to manage this grant or for grants management, but the whole year worth of stuff, you cannot. Most of the time, people are not going to pay for that. You should have that already. That's not their job. Okay. Now, you can oftentimes say, I need it because I'm moving from a $20,000 budget to a $200,000 budget now. That's going to greatly increase my cost. So then I write that in when I wrote the grant, though, to say management of this grant with a CPA and doing the 990 because I never did a 990 before. But you just took me to another level. That's as a result of this. So if I get it, I'm going to put that in there. Usually they're going to fight you back and say, no, they're not giving that to you. They're going to reduce some things down. But you can ask them for it. And if you have money left over on the end, like we did with the city last year, we was like, well, we need to do our QuickBooks and we have this money left over. She's not going to charge us a lot. It wasn't an exorbitant fee. She wasn't in the organization. Can we pay her? Sure, no problem. We want you to spend all the money. So it's a negotiation, is what I'm saying. But when you write your budget, if you don't know those numbers at the beginning, 9 times out of 10 is going to be a no. And if you read the grant and they say they only give you 10% admin, you figure out where you want to spend your admin.
Okay.
Yeah. Provide read-only access to the accounting system to the treasurer and the CEO. The bookkeeper should do the books. The treasurer should get reports. The CEO should just look at stuff. I'm the president for Maumee Bay. I can look at the Maumee Bay bank account, but I can't do nothing in the bank. When I go get another card, I'll be like, Linda, Trevor, I need another card. I lost the card. Same thing at Multi-Faith Council. I do all kind of stuff for Multi-Faith Council. They don't know how to set up online banking. I could manage the online banking process, but I just got a new bank card. I can't even authorize my bank card. One of them got to do it. The treasurer has to do it because that's how they have it set up. Typically, it would be a bookkeeper or the finance team, but their finance team is older. They don't operate like that, and none of them touch the money. It's 3 people that touch the money at Multi-Faith. And it's a checks and balances process all the way around. We just lost a bookkeeper, so if you know somebody that want to put stuff in QuickBooks, we're about to have that meeting now. But they've been moving a little bit of, it's not as much money as you would think, but we got a lot of accounts. We got like TD Ameritrade accounts, and we got people that donate stock to us, and we get those required minimum distributions that she was talking about. If you got a lot of older people, them sports people, send a letter out to their grandparents or to the things and say, hey, if you retire from Jeep and you at this age of required minimum distributions to come out, consider donating that to us, right? So if you donate that to us, you don't take the hit on your taxes. And you RMDs is usually like, they got a lot of money sometimes. Sometimes they don't have a lot of money. Some people do live off of those. But if they donate it directly from the retirement account, they don't take a tax hit for that. RMDs always bump up your taxable income. And they be like, I forgot about those RMDs. Not a thing. They be pissed about the RMD because when they retire, they didn't think about that. So if you know when that happens and when those things, that's when you remember what Jerica said about it's not a manipulation, but you're telling people what they don't know and how they can help you. You probably didn't know this, but you could donate that. The same thing with the Amazon Smiles. You probably don't know this, but I know you shop at Amazon. Next time you do, when you get to the bottom, select our organization. We on Amazon Smiles. Send your extra change to us. Pencil, what the thing? Amazon Smiles. Go to amazonsmiles.com and make a nonprofit account. When they approve you, every single person that you want to, tell them when you pay for something on Amazon, click the Amazon Smiles button and put my organization in there and make sure I get that change. You can require that all your people that participate with you do it.
Quick question. How we get to like St. Jude? You go in the mall, you go in the restaurant. Could you round up? No, I cannot. How we get to that status?
You gotta be large for that. Yeah, you gotta be large. You gotta have like some national cred, and you gotta have a system for them to send you the money back, right? So if you go to like I don't know, Red and White might do it, and they might just cut you a check on the side. But they're going to they're going to the chain.
Yeah,
St. Jude, St. Jude goes to the chain. They'll go to Walmart and say, "Run this thing. Here go the numbers." And every time they round up, it just go right to St. Jude's account. So you can start small in that space.
There are some programs. Walmart does have a roundup program that smaller nonprofits can sign up for. You just have to kind of like look through different corporations and organizations because they do have community reward programs. So community reward programs. And that's with the different corporations.
Yep.
Walmart does have a change program where it's not in the store. It's online only. shoppers that shop online, they are able to donate.
Banks have CRA money, Community Reinvestment Act money. Every bank must give money to the neighborhood where they reside. Every bank. Not all the time. Not all the time. Because they are CDFI, which is some more alphabet soup that financial institution that service, what I'm saying, specific populations. But the banks got to have it. Y'all don't have to do Community Reinvestment Act, do you? No, because we're not. Yeah.
Oh, yeah. Traditional banks are for profit.
Yeah. So they got to get their money back.
Yeah.
Yeah. Okay, what's another one? Utilize online banking with view. Oh, we already said that one. Okay. Next. We almost done, y'all. We're not gonna do this. We done. We'll do this. We'll start with let's build a budget next week. So next on the 18th rather. So we're going to create a budget. So now y'all got some time to think about it. So if you at an organization, you're not on the finance team, try to pull all the numbers that you can together, either for a program or your budget for the following year. If you running a business or want to run a business, start looking at all the things that you need to pay for your startup on your business. So we'll have all of this stuff. And then we also have Tana Schweier. Tana Schweier writes grants for major organizations. Very user-friendly. She's going to run a half of the session, and I'll run the second half of the session. So our goal is talking more about how do you get funds, right? So not fundraising necessarily, but more in that grant space. We can talk about some fundraising actions and opportunities as well. And then any questions that y'all have about finances, Darlene gave a lot of info today. Charitable University got some information in there. I think building that budget, if you have your program budget, you could bring that. If you want to do that, and we could go over it and look at those things too, and see where we can add in some more things. And are you leaving out a whole bunch of stuff that you don't do? Yeah, because you don't have nothing in there yet. But you want to plan for it, and then you want to see what do you owe every year, and how can you grow? Because a business never stays stagnant. They're always looking on the upswing. So what did it look like last year? What do we want to look like next year? That's it. All right, we done in 10 minutes early, and we started 10 minutes late. All right, y'all. Thank you so much.
Thank you, Ms.
Yep, we can send this out. My presentations, I ran them all together. So I didn't separate them out, but I can separate them out and send them because I'm building a database where everything that we got each week, it'll be in a folder in the drive, and all the people in the boot camp will have access to the drive.
Don't play with it, don't be dishonest. Still not understand.